Okay, will we begin? Okay, it's 1 minute past 12 Central European time, so I think maybe we should begin. So you're all very welcome to the second day of this semester's economic policy panel. The first paper is by a team of 6 co-authors, and it will be presented by Ruben, who has 20 minutes, and then there will be 2 discussions of 10 minutes each. The protocol for questions that we decided on yesterday is that if you want to ask a question in the 15 minutes of time that we have for that, at the end, just type the word question into chat. Thank you very much. Ruben, you have 20 minutes.
Okay, let me share my slides first. Let me know if everything works.
That's good.
Okay, that's perfect. I'll let my start my time here so I don't lose track. Okay, so first of all, I would like to thank the editors for allowing us in the meeting, and it's a pleasure to be here. So today I'm going to talk about real-time inequality and the welfare state in motion, and I'm going to present some evidence on the impact of COVID-19 in Spain. This is joint work with a large set of co-authors with Marta and Jose, who are my colleagues here at UPF, and Oriola Spax, Alberto Graziano, and Josep Mestres, who are from the research department at CaixaBank. So let me start with a brief motivation. Say, the COVID-19 pandemic has clearly had huge economic consequences around the world, especially in Europe. For example, in Spain, the country we focus on, GDP in 2020 dropped by over 11%, and the forecast for 2021 is also quite grim. Now, one important concern that many people share is that the economic impact of the pandemic may disproportionately affect the more disadvantaged segments of the population, and then hence exacerbates existing inequalities. And to alleviate these risks, government in most countries are investing vast resources to support the income of families, as well as to provide kind of credit lines to firms. However, understanding to what extent this measure is sufficient and effective is challenging, because it's usually not possible to track income inequality at a high frequency. For example, if you look at official statistics, which is usually the source of information about inequality that we use, they are yearly statistics, and they usually become available with 1 or 2 years delay. So they're not super useful to evaluate and adjust government responses quickly on the go. So in this paper, we propose a new approach to track inequality at a high frequency using data from bank records. So we look at Spain, the country we focus on, and use data from our partner, CaixaBank, which is the second larger bank in Spain by total assets and the first by direct payroll deposits. So we have information on all CaixaBank account holders that receive either payroll payments from an employer or the government transfers, or both. So in each month, to give you an idea, we are able to see whether an individual, an account holder, works and gets paid, or receives government transfers, either unemployment benefits or furlough schemes. So our sample consists of over 3 million depositors, and our data cover the period between February and November 2020, that is before, during, and after the national lockdown, all the way into the second wave of the COVID-19 in Spain. So in a second, I will tell you more about how we construct our sample and how representative it is of the Spanish population, of the Spanish working population. Before that, let me very briefly tell you what is the stream of literature that our work relates to and contributes to. So first of all, it relates to a large body of very recent work. They use real-time data for private sources to track economic activity. Probably the most influential work in this line has been by Jetty and co-authors. We use data from a range of private sources to track the state of US economy in real time during the pandemic. Our paper is novel in this regard because it uses similar high-frequency administrative data, but to study the evolution of income inequality. Our paper is also related to other work that try to measure inequality using real-time labor survey, namely in the context of the pandemic. The difference with our work is that we use administrative data, which to some extent can help overcome some of the limitation of self-reporting data. And finally, our work relates to other papers that use data from credit card transactions to study the responses of the consumption, in particular to income shocks. The difference, in our approach is that we use bank data on payroll and government transfers, which are unique in that they allow to study inequality in earnings, not just consumption, and most importantly, to assess the effect of government policy. So moving on to the description of our sample, it includes all account holders of cash or bank aged 16 to 64 that in the 2 months prior to February 2020, our first month of analysis, had received any wage payment or government transfers. When considering salaries and transfer in month T, we take all the payments received between the 16th of month T and the 15th of month T plus 1, so that basically we can capture all the payments regardless of whether they're paid monthly or weekly or daily and so on. Now, we only consider accounts with one account holder or those with multiple account holders, but with one wage earner, which again represent the vast majority of the original sample. And we only focus on individuals that use their account regularly. So as mentioned before, we follow over 3 million people for 10 months. And what's important to note is that, we focus on wage income and do not consider other sources of income, such as capital income. So when we talk about inequality from now on, we really refer to wage income inequality, not to total income inequality. So that's important. However, of course, wage income inequality represents a very important component of total income inequality. So it is informative to some in that regard as well. So the first question is, how representative is our sample of the Spanish working population? And to address this issue, to clarify this issue, we compare the distribution of wages in our data with that in the latest wave of the official wage survey by the Spanish Statistical Institute. So the graph on the left shows that the two distributions reported in gray and red, respectively, they look remarkably similar. In the table on the right, we also report, various percentiles and the corresponding Gini index and various key ratios that are also being used to measure inequality, and they all look very comparable, sometimes to the second digit. Now, the Cash Bank sample looks very representative also in terms of gender and age compared to both the official wage surveys and the two labor force surveys from 2009 and 2020. So in this regard as well, it's pretty reassuring. Now, the first aspect we focus on is how wage income of the individuals in our sample changed between February 2020, the last month before the pandemic, and April 2020, the first full month of the pandemic. To compare to the change between February and April of 2019, so completely pre-pandemic. So this deep in deep, if you wish, approach allows us to separate changes in wages that are due to pandemic from seasonal fluctuations, which are pretty pronounced in the Spanish economy. They're unrelated to it. Now, let's first look at the red line. The red line represents pre-transfer wages. So if you look at the entire sample, which this figure relates to, you can see that compared to 2019, a much higher share of people lost all or most of their income in 2020, while a much lower share on this side experienced any increase in wages or no change. The blue line, which takes into account, this is the graph you should look at. The blue line that takes into account the government transfers actually show that these transfers were very effective at alleviating the situation, especially for those that lost all of their income, the share going from 12% to about 4%. Now here we show the same graph as before, but separately for the bottom quartile and the top quartile of the pre-pandemic income distribution. Now it is clear that the drop in income was more pronounced for low-paid workers, so for the bottom quartile, than for high-paid workers. And most importantly, that the government intervention, which is measured again by the vertical distance between the red and the blue line, affected much more the former group, the bottom quartile, than the top quartile, as you would expect. Now, we then look at the evolution of inequality measured by the Gini index. So again, to account for seasonality, we show the change in Gini between each month and February 2020, net of the change between the same month and February 2019. So again, this deep in deep approach. So one thing we can see is that if you take the first month, March, which was only half, let's say, but there was an increase, net increase of 4 percentage points in the Gini relative to 2019. The increase was much more pronounced, about 11 points in April and 10 points in May. This is huge, the months of the lockdown. And it remained quite large, but gradually decreased from June through November as the economy reopened. Now, the blue columns represent post-government, post-transfers. And what you see here is that, again, the government intervention was very effective at alleviating this situation, with the partial exception of March, when some of the transfer reached the recipient with some delay. You can see here the difference between the red and the blue column are not that pronounced. Now, to understand what segments of the population were most affected by the pandemic, we look at difference between men and women, people in different age groups, and between natives and foreign-born, among others. Now, in the paper, we have a section that examines what part of the overall variation in inequality, overall increase in inequality, is driven by variation between groups, say between men and women, and variation within groups. We actually find that most is due to variation within groups. So the graphs I'm going to show you now, it's really focused on this aspect, inequality within groups. So if you look at the evolution, here between, for example, of Gini separately for men and women, you can see that inequality among women increased somewhat more than among men for pre-transfer, the red columns, and less so for post-transfer earnings. If you look at the same graphs by age groups, it is clear that inequality increased much more among the younger cohorts, people aged 16-29 in our data, followed by those aged 30-49, and even less those for 50-64. Also, you will find that within group inequality increased much less for native than for foreign-born, for which the increase in Gini, for example, in April and May was a whopping 17 to 16 percentage points and remained fairly high also in the following month, very persistent. Now, still regarding difference across groups, since the people most affected were those that lost their job, as we showed before, we examine how the probability of being employed evolved over time for different groups. So to do this, we estimate a regression of employment status on a set of individual characteristics, again, age, gender, country of birth, and so on the pre-pandemic wage quintile, so how poor or rich you were compared to the distribution, and province fixed effect. And we plot the coefficients of the interaction between each of these attributes and month fixed effect. Again, how much each of these characteristics affected the probability of being employed and how this changed over time. And we report the respective 95 confidence interval. Since we have 3 million people, these are pretty tight, as you can imagine. So the results are summarized in these graphs. The first show that individuals in the lower part of the pre-pandemic wage distribution were less likely to be employed once the pandemic struck compared to those in the higher part. So the relationship is monotonic and the differences are large and persistent. The same applies to women as compared to men, this graph, to the younger cohorts relative to other age groups, and to foreign-born relative to natives. And one thing that is interesting is that while the difference along gender age and income dimension tend to decrease over time to reabsorb as the months elapse. The penalty, the penalization of foreign-born individuals persists and, if anything, increase over time. Now, another aspect, we look at how inequality evolved in different areas of the country, spatial differences. So this figure shows, again, the change in the Gini index for pre-tax income for the month of May, July, and November, compared to February as usual, for the 17 Spanish regions. One thing you can see clearly is that some regions, such as Catalonia, La Rioja, and Aragon, inequality rose much more than in others, such as Madrid, Galicia, or Navarra. Although, again, if you look at the post-transfer, most of this difference was, again, offset by government intervention. In the paper, we explore what are the factors that may be driving these geographical differences, with particular regard to the sectoral composition of the regional economy and the intensity of the mobility restrictions in each region, which actually varied a lot between regions of Spain. And again, the main two patterns that emerged, we don't have time to show you all of this, so we summarize this, but first, the increase in pre-transfer income inequality was larger in regions that relied more heavily on industry and especially services, like retail and tourism that were most affected by the pandemic. The second thing is that, not surprisingly, inequality increased more in regions where mobility restrictions were tighter. Again, we also see that government intervention were very effective at alleviating most, if not all, of these differences. And then when we look at the relationship between mobility and inequality, one interesting thing that emerged is that over time, inequality became less responsive, less sensitive to mobility. At the beginning of the pandemic, less mobility was associated with much higher inequality, but over time, this became less pronounced. So this can be interpreted as individual and organizations that were more affected by mobility restrictions becoming better at adapting and coping with this restriction. Now, to sum up, our results indicate that the pandemic led to a considerable increase in pre-tax income inequality in Spain, that this was mainly driven by job losses and to a later extent, some kind of cuts in wages for low-income earners. The pandemic also affected certain groups more than others, amplifying pre-existing inequities, and also certain regions more than others, again, depending on sectoral composition and the intensity of mobility restrictions. Overall, we find kind of the good news is that government intervention appeared to have been quite timely and effective at alleviating these tendencies. And then from a methodological perspective, closing, and we think that our analysis shows that the potential using this bank data to study inequality in a way that can provide valuable and timely insights to policymakers. And again, more generally, we're very excited about the possibility of using this very rich data to study other important questions that have emerged over the course of this workshop, such again, the medium-term effect of the pandemic, doing more on the spatial dimension of inequality, on the implication of remote working for inequality, on the issue of investments in human capital by different segments of the population. And again, we look forward to working on all of this. So thank you for your attention and for your comments. We look forward to your questions.
Thanks very much indeed. Those are incredible data, actually. Our first discussant is Roland Ratlo from Warwick. So Roland, you have 10 minutes.
Okay, can you hear me well?
Yes.
Great. Thanks a lot, and thanks for giving me the opportunity to discuss this very, very interesting paper. So this paper, really in a short summary, and probably taking some of it's a very rich paper. So there are lots of evidence that are gathered. So I try to kind of summarize what I get. So the data are very particular. This is monthly total in payroll income and labor market related transfer or benefits from the government, from CaixaBank, personal bank accounts. So it's a paper that deepens another paper that has been published now in +1, if I understand well. So what there was already in the paper in +1 were some of very interesting findings, which is earnings were cut for everyone, but more for the workers that were at the bottom of the distribution. There was this government transfer that offset most of the pre-benefit losses, and the fact that men and women were more or less equally affected. So there is a little bit of a difference, but I think the dimension of the heterogeneity is more on the age. So the young being more affected and the foreign-born being much more affected. Yes, so the contribution of these papers really is that it expands the scope and of the +1 analysis, and in particular it includes data from June to November 2020, which means that not only you can have the immediate impact of the crisis, but you can follow up and see whether it has rebounded or whether it stayed the same. And you see that indeed the inequality keeps decreasing, except maybe for what happens in December, where you see that there is a slight increase or at least an uptick in terms of inequality. What it does as well is that it explains cross-provincial differential evolution of inequality, trying to kind of say, well, what was the inequality overall? And it shows also the evolution of employment rates. And that's a part that maybe being a labor economist I was particularly sensitive to, where I think, you understand that this margin of employment versus not employment is one of the major drivers of inequality, and looking into the evolution and employment data in real time has incredible potential. So maybe just to take two slides that really I found striking when we did the paper. So the first one is this one, where you see really that the Gini pre-transfers increases suddenly and then decreases quite markedly, and you see that still at the end of the day, the pre-transfer inequality doesn't go back to zero very, very, very fast, but the post-transfer one remain at levels that are really, really low. So meaning that the transfer system actually worked. Even though, I mean, there are still some months where, and especially as the pre-transfer goes down, you still see that the post-transfer, the share of the post-transfer in the pre-transfer tends to increase as time goes, which I think is interesting and not necessarily well understood. So that's also something that invites further questions. Employment gaps. So the employment gaps I found very interesting. So you see that starting from, well, you don't start from zero, obviously, but here you see that you recover pretty much everything that goes down deep in the crisis, but you see that more or less the impacts are relatively small for gender. If you look at what's going on for country of birth, I find that very interesting, because compared to what's going on the Gini index, you see that actually employment gap goes down, employment gaps increases, so employment for foreign-born actually goes down. And it actually doesn't get better. So you would think that because inequality overall are kind of going down, things are going well for all the groups. But you see that there is this particular group that is particularly affected and remains affected durably during the crisis. These are the foreign-born. So can this paper be improved? I mean, it's a very clear paper. It shows very, very interesting summary statistics. And really, I also was very excited by all the perspective that this data were offering. Of course, when you read this kind of paper, I think one of the reactions you have is that you want more. So you want more. So in a sense, for instance, one of the things that could be potentially very easy for the authors to do would be to do this unemployment decomposition, which means what exactly can we explain by this margin of employment or not employment in terms of inequality, and instead of doing it just for the post-crisis, you can do it month by month in order to show whether this is something that continues to be very relevant, and my guess is that it's going to be increasingly relevant maybe as time goes. So the question of the extensive or the intensive margin in terms of employment, I think it's important. I was also thinking in terms of in this data whether, and that's probably not necessarily for this paper, but like whether we could infer somehow a decrease in working hours. So in a sense, because you have the payroll data before the crisis, you could try to see whether, I don't know if you have like some ideas of employers, but whether you see that there is a decrease in the intensive margin and not necessarily losing your jobs. So in a sense, whether you can track that some activity was reduced also in terms of working hours. So of course, the big thing that we are not really observing here are all the non-wage earnings during that period. It's of course, then that raises the question, it looks like the data is there because obviously this is in the bank account, or some of it is in the bank account. But so the question is whether, is it a matter of authorization? Is it something that's going to be in the next paper as well? Because I think we would like to know whether, for instance, there are some mechanisms of compensation that played during this crisis, whether there were some other transfers either across people or not, or whether exactly in the other way around, there was some insurance that was taking place before and cannot take place during the particular crisis. And then, of course, here there is this issue about non-employment or self-employment, right? So we hear all these anecdotal stories from the fact that people who couldn't work or couldn't work as much as they wanted to started to work as delivery drivers or Uber drivers, whatever. I mean, so all the works that can be done on the side, and so that amounts to revenues that kind of compensate with some kind of activity, especially at the lower part of the distribution, where we show that, I mean, where you show that something is going on particularly. So are there other ways through which people make up from the loss of jobs and revenues? I think then there are some very minor things which are, so I think the decomposition, I found it very difficult to read the whizzing between group because of the Gini index. So I was wondering whether using the tail for this particular exercise would be a better choice, because then you don't have this kind of overlap thing, which turns out to be quite big, and it's always very difficult to interpret. So choosing, it doesn't seem to be that the Gini was chosen for some particular properties. So if you don't care so much about one index or the other, you can just take the tail and that's going to make everyone's life easier. And then I guess my last point would be, that's also very much a detail, is that given that you already make a lot of points, in particular considering the quality of the data, its representativity, all this is done in the +1 paper. So you could cut the chase and just bring the everything that's going on in terms of the year and all the explaining what's going on straight ahead, and I think it's going to just increase the impact that this particular paper could have. So once again, thanks again for giving me this opportunity. I really enjoyed it.
Thanks very much indeed, Roland. So next up we have Chiemo Fetzer, also from Warwick. Chiemo, you have 10 minutes.
And unmute. So thanks a lot for giving me the opportunity to discuss it. I guess we could have done some within department smoothing on this. This is a great opportunity to be here and to discuss this really really important piece of work. I think I have some comments that are a bit auxiliary or sort of in addition to what Roland has indicated. So I'll sort of probably be slightly more brief. I mean, it's a very nice descriptive piece of analysis that tells us something that, in this case, the pandemic and sort of the unique data access that sort of came forth actually allowed us to measure real-time impacts on income support measures, the targeting, the effectiveness, and so on. And it's obviously motivated by these big concerns about the impact that that COVID might have on inequality, social cohesion, and thereby also potentially on politics. I think this is not a critique, but this is a point where obviously we actually need a lot more work to on this link between inequality, political outcomes, political economy, and so on. Because this is where actually I would think that a lot of the work is still done in political science and it's a bit fuzzy. So I think it's something that's a call, I guess, on the profession. The findings are really striking. Government transfers mostly offset income losses, except for distinct groups. There's notable regional differences, and there's a specific focus on the within versus between group inequality. I think that's really important, but it also has some external relevance concerns or questions that I think I'll sort of get to slowly later. It suggests that the fiscal response was very important. I mean, we kind of knew this already, but it's sort of like some prima facie evidence that it can offset a lot of the first order negative impacts on incomes and to significant extent also on inequality. And as I said, so the focus and the evidence suggests that a lot of this is captured by rises in within group rather than between group inequality, which I think is also important when we think about sort of social fault lines and how politics might respond to this specific shock. How does this playing out? I think in terms of the presentation, I would share Roland's concern that you can cut a lot of material that seems a bit duplicated from the +1 paper. There's a lot of material in there, so I think making it sharper and more focused on the new stuff. You don't need to justify the data that has been done already. I think you can really save a lot of space here. Just as an illustration, I think the right-hand side figure, you could also think about using a waterfall chart to make the presentation slightly more dense and sort of keep the density plot. That's sort of all the point is about raising the mass points and highlighting the mass points. Move that, I think, to an appendix for the interested reader. I also think that when I said, oh, I was disappointed because I think the data stops in November. How does this go on, right? And at some level, the value of this data is that it's sort of more readily and more regularly available, depending on protocols and so on. So, but it would be really great to have these things update, as they stand now. Because there's some indication, as Roland was also flagging up, that especially towards November, you do see sort of an uptick, right, in the sort of even in the post-transfer inequality, which suggests that maybe some of the measures have lost their effectiveness. And I think this is really important because obviously, the furlough scheme, these sort of schemes, they're betting on this friction between hiring costs, and the option value of retaining an employee and the cost of sort of, rehiring. And so firm expectations really matter, and we need to understand this. And I think even more so, in the context of a labor market that has notable dualities, right? Where you have sort of, fragmented labor market with permanent contract and temporary contracts. The question is who actually benefits from the duality and from these schemes. And I think the observation that there's sort of this within group increases could suggest that actually, the furlough scheme, these might be actually benefiting the already privileged more than the less privileged, right? And I think that's really important if we think about also how this matters for labor markets more generally and sort of, in that sense, automatic stabilizers, whether, we have this great tool of a short-term work furlough schemes that really can deliver a lot, but they might actually exacerbate certain inequalities. And understanding this, I think, really is a first-order important question that I think is really important that we need to, more work needs to be done. And I think you have the means to do that. And so I think, I guess you're probably already thinking about this. So I think this is really important. Obviously, going beyond the first wave, the second wave, firm expectations, I think this is really important. There's a few more points I would like to raise. Obviously, the observation that we have these heterogeneities by gender, country of origin, is really important, but understanding what's driving this, again, is important. Is it about differential access to welfare? Is it about within household allocation of labor, especially as, care sectors, were shutting down for childcare and so on. I think this is really interesting. Maybe you can actually, for example, on the migration side, there's 2 points on this, you can distinguish temporary versus more permanent migrants, because what we know, at least, and this is something that comes up 2 points further down, is that there has been significant exit of lots of foreigners from many countries I guess some countries have experienced a lot of this, right? Especially in the UK, where there's some indication up to 1 million people might have left the country to keep on carrying on the work. This also has some measurement implications, because obviously when they keep using, a UK account to pay for transactions that are happening in a different, even in this instance, even a different currency, potentially with higher transaction costs, might have an impact on the sample composition. But I would think this is second order. But again, you have the means because you have the country of origin. So decomposing even the foreign-born by EU versus non-EU might be particularly interesting, because the EU migrants will have protection under the social security collaboration within the EU, whereas the non-EU migrants, they're kind of tied with their visa status to Spain. And I think that's potentially really interesting as well to decompose this. It could be that it doesn't matter, but I think I would find this interesting. To chime with a point that Roland raised, there's a similar issue about self-employment and self-employment, which is sort of removed from the sample, endogenously responding to the crisis, courier drivers, delivery and whatnot, in a way that I think, might be important. And I guess it raises some question about the data, whether you can distinguish this in the data, the originator of the payroll payment, which, I think is something that would be quite interesting and important. I think I've covered most of the points. I think an important point is on the within versus between group inequality. I think here, what would be really amazing is if you had the data for the 2008-2009 crisis as well. And I don't know whether this, I would expect some of the IT infrastructure exists, but obviously the COVID-19 shock is different, right? It has a crazy, signature on specific sectors. And I'm just wondering whether to what extent there's similarities versus dissimilarities when we think of other large, shocks, and the 2008-2009 crisis coming to mind. Whether maybe this observation is an artifact of the specific shock, as opposed to the COVID shock, which has a specific sectoral signature, as opposed to the 2008-2009 crisis, which might be more of a shock that we might see more often in the data, I hope, at least in comparison to the COVID shock. So I think this could be really quite interesting, again, in terms of just helping our understanding a little bit. Also, what I think would be really nice, that you could potentially use this data to distinguish between, exit and entry, of migrants, right? And I think in general, like whether you can use this data to measure population flows. I don't know to what extent this is so relevant for Spain. For the UK, I think it would be very relevant. That would be quite interesting. I'm pretty sure exposed from some bank account and the transaction that happened, one can infer whether somebody's physically present or not physically present in a country where they're supposed to be a resident, which also raises the question about how accurate is the address data that's being used. I also wanted to say something that's unrelated to this, and it's because I'm kind of working on something with some colleagues here about the big picture and what I think this paper also draws up, because I think there's obviously the pandemic highlighted significant deficiencies in the public sector about collecting, processing, handling, and analyzing data in a timely fashion. But it also highlighted that there's a lot of data. It's extremely useful that it's in hands of private sector organizations. And I have my fair share of months of wrangling with lawyers and whatnot, to open up access. But it also raises huge questions for the profession. First of all, is how can we unlock data from the private sector, for research purposes, benefiting the common good to build public knowledge goods. I think this is really important. The value of this data is increasing the ability to merge with other, which oftentimes this other data is held by other private sector organizations, which might raise issues about competition, conflicts of interest, and so on. We have this observation that the private sector often lacks the skills, the interest, or the capacities to invest in sort of primary research. And there might even be tangible conflicts of interest that I unfortunately had experienced myself, whereby a private sector entity wouldn't allow me to use data that might be producing insights that are critical of government policy, because the government is a client on the other hand, and they don't want to sort of spoil the relationship with the government as a client. And I think this has, significant implications on a political economy dimension as well, that we as a profession should think of. And I think CEPR is a great way and forum to think about this, in the same way that we also should think about the impact that this has on the profession, because typically I would expect that access is restricted and typically involves more senior academics, rationing data use in a way to produce, protecting certain academic rents, raising reproducibility concerns, transparency concerns, while at the same time, possibly not getting the best research done on this privileged data, because obviously there's data access is being rationed. So I think this is a big thing that I just wanted to sort of get off my chest as well, because this is, a really great paper, but it also highlights some of the issues that are independent of the paper that I think the profession needs to think about. I have a few smaller comments, but I won't bore you with those. Thanks.
Thank you,
Thanks
guys.
very much indeed, Chemo. On your last point, the discipline that springs to my mind is archaeology, where precisely senior academics, you have monopoly rights to a particular excavation site. And then there are some countries where those are very jealously guarded. Anyway, we have some questions in the chat. Let me begin with one that came to us via YouTube from Libertad Gonzalez, who used to be a panelist. So she says, "Hi, Ruben. Do you know what are the main types of government transfers driving your results?"
So, I'm sorry, should I answer this question?
Yeah. I think that's fine. Answer.
I can answer that, but if I have a minute to think and respond maybe to Roland and Timo, you let me know. So for we are able in our data, we are able to distinguish, not to distinguish, but basically our data come from about this, the programs, the transfer programs. We have unemployment benefits and the furlough schemes. We're not able to distinguish between the two because they're basically like literally paid by the same entity. So when the transfer arrives on your bank account, the label of the payer, it's the same. So this was something that was raised, a very good idea by the referees, but it's not obvious at all for us that we can distinguish those. Because again, it comes from the same payer. So we don't know. So that is, in some way, it's a limitation, but they're basically only those. Now Spain is implementing, other type of programs and so on, but we focus specifically on those because we have, again, the payer, who the payer is. So these are the two programs to answer that question.
Thank you very much. Guillaume Chapelle has a question.
Please, Guillaume.
Yeah. Thank you very much. So thank you very much for your presentation. It was extremely interesting. I was just wondering, so you are in between like descriptive statistics, and there is a kind of causal flavor as you have this difference in difference approach as comparing with the previous year. So I was just wondering whether you had access to the 2018 data in order to look at the pre-trends in your because if you think that there are some changes, because you have all this literature that Piketty says that say that inequalities have been rising, so you might wonder whether maybe by just doing this simple difference in difference without looking at what was the previous trends, and if equalities were actually already increasing, then you might maybe overestimate, or if they were decreasing, you might underestimate what's the impact on.
So in principle, we could do that. Because the information is there. The only thing is that some people change banks over the course of time. So the more you go back in time, the more new people come in. Some people get out. So it's not, let's say it's not balanced or whatever. So you may do two different cross sections in some way, but not follow the same people. The more back you go in time, the more you're subject to this. People are free to change their bank account, so you cannot necessarily follow them for too long. But in general, yes, we could. The goal for using 2019 was really to control for seasonality, which are very big in Spain. So that was the only goal. Ideally, we could potentially go back more and say something about the issue that you're raising. Thanks again.
Very good. Ghazala.
Thanks. So just a couple of short questions. So one, I think, has been raised because I think, this within a cross-group heterogeneity is super interesting. And so it would be really nice if you can get this a little bit more. I understand. So my question was also whether you could understand whether there are differences in the types of benefits so that you could address and understand why you're seeing this heterogeneity. But in general, going into trying to see where this why this is happening is interesting. And then two other small things. So one, do you have a sense of whether there's what proportion is sort of cash in hand payments? So whether this can tell us about whether there's some type of underestimation of the inequality that you're seeing with this banking data. So just to kind of understand. And then one last thing, which is, do you have a sense about credit given by the bank and whether there is any type of, whether this raises any type of issue with respect to inequality as well. So is this something that you can measure with your data?
Okay, so caching hand performer. Sorry, I lost the. Can you repeat the first one? Because I lost it.
The first one I think has already been raised. So it was really to get more at this heterogeneity and to see if you can distinguish between different types of transfers, to understand why, I mean, you know, this difference that you're seeing with the immigrant.
So in terms of the heterogeneity, I think that relates with also what Timo and Roland say about this two-tier market, job market in Spain. Pretty much, there is like literally like in Italy, but potentially even more. There is this market that is a like part of the labor market is very like temporary jobs and so on, which primarily, again, relating to our argument, affects the young people and the foreign-born. There is something in the paper that I didn't show, which is if you zoom into foreign-born, you see this very big difference between foreign-born, let's say expats from rich countries. I'm guessing the European Union, going back to Roland's point, is also in there, and people from non-rich countries, or maybe basically everybody else. And inequality raised much more, among the latter group. So basically, I do agree with I think Timo said that about this two-tier market and how this can interact with some of these policies, potentially aggravating some of these differences. The other one about cash in hands, our understanding is that the vast majority of this transfer do actually occur on your bank account. So again, the 97+% of Spanish people have a bank account. So the level of financial inclusion is very, very high. And I do think that this is disproportionately the way you receive your transfer. So that's good for us because we are not missing a lot. And then in terms of credit for banks, one thing that happened in Spain is that at some point the government asked the banks to anticipate some of the benefits that the government was supposed to pay. And so banks basically advance cash to the recipients. So that's why in partly this was a little more timely. What you are saying is about credit by banks. We do not have this information. We are aggregating, and this goes again, an answer to some of the questions before. We are working on aggregating data on expenditure with credit cards, on other type of expenditure directly in our accounts. We could have something on savings accounts, which again can talk a little bit about capital and other things. But about credit, we don't really get that. So it's it's gonna be a little tricky.
Thanks very much, Roberto Galbeati.
Yeah, so great paper, bravo Ruben, as usual. So let me just point to there is one curiosity they have. So it's a sort of gargantuan appetizer what you have, and then we all think about possible outcomes of these changes in inequality. And I'm sure that I know you well enough to know that you are cooking something, right? And sure, for instance, that you know that there have been elections in País Vasco and Galicia, and it's a bit. It would be great to have some sense of how these changes in inequality that you are tracking affect those elections. So I'm sure that you already have the results. In some of your. It would be nice to see them.
No, this
and
is
then and then a more like technical comment that links some of what Gasala was saying. So is there any possibility? You say, of course, they all have a bank account, the Spanish, but there are many of them, probably those that are the richest or relatively richer, that may have multiple bank accounts. And so if you are not tracking transfers in these Caixa banks, they may have a bank account at, I don't know, Bilbao Bank, okay? So you're missing those transfers, and this is biasing your approach.
So that's a problem that we discuss. That's a problem that we discuss in the paper. So
okay.
One important thing that when people so in Spain it's called this nomina. That's where your salary is deposited, and usually vast majority of people have one nomina and they deposit it in one bank. Okay, then you can have multiple accounts for savings and investments and so on and so forth. That's why we exclude the self-employed, because self-employed are much more likely. First of all, they have very irregular earnings. It's really hard to measure what their monthly salary is. but also they tend to use multiple accounts, one for personal expenses, one for professional expenses. That was one of the reasons why we exclude those. So we're still vulnerable in part to that. But again, to the extent that most managers have one nomina and they deposit all in one account, there is a very strong, I can say, kind of faithfulness to your bank. Again, when it comes to financial investments, that's a totally different story. That is why it's going to be more complicated to incorporate that. But we're fairly, we're fairly kind of confident that when it comes to your main salary, you usually tend to deposit in one bank. So, and most people tend to have one nomina, one, salary only. So that should not be a huge problem. Although, again, we acknowledge this in the paper, and it's clearly a caveat that, not as pronounced as, if we were doing this in the United States, it would be a lot more complicated. People have 10 accounts and whatever, 5 jobs, and they receive everything. So clearly, in that case, you would need to use some financial aggregators that look at all your accounts. But for the case of Spain, this is a lot less problematic. And I don't have anything cooking right now. This is a team effort. We are already, working very hard. These data are great, but there are also a lot of, terabytes and terabytes of data. And so now we are working on getting a more organized infrastructure with a data scientist to help us do these things much more, effectively. But so far, and going back to Timo's point, so far the collaboration with, our fellow, our friends at the Caixa Bank has been really, really good. We haven't received any, no restriction about what we can and we cannot, investigate. There is always a lot more confidentiality restrictions and so on, because, we can potentially see every expenses on Timo accounts, and that's not, or any account, so that's very confidential, and confidential is important. But so far, the collaboration is going great, and we look forward to, doing much more on these different topics, and also bringing on board other of our colleagues at UPF, on this thing. So my experience so far has been so good. I have other type of experience when Timo thinks about maybe, big tech companies and the way they share their data and what type of results they like and what type of results you may end up being able to publish. So far, I have to say we didn't have any such pressure or any pressure at all, in fact, on this. So a positive experience for once.
Thanks very much, Jeff. So the last question is from Fiorella.
Yes, thank you. So that's a very nice paper, and I find it very interesting, the result that the sensitivity of the pre-tax income inequality to mobility decreases over time. So again, trying to think more about why that is. So one reason for low-income workers to suffer more is that they typically work in sectors where remote work cannot easily be done. And so I was wondering first if you can see in your data whether these workers have changed to different jobs, perhaps in less affected sectors, or an alternative explanation is that these results is simply maybe exacerbated by looking at the Gini, in the sense that maybe high-wage workers initially were protected during the first phases of the pandemic, but then over time they started losing wage income as well, and this is what drives the Gini back to March levels.
Right. Okay. So you have 2 minutes, Ruben.
Yeah, sure. So in some way, one important thing that you are mentioning that we're really trying to work hard is to map the employer, so the payer of the salary, to the sector. This is actually not easy because we have millions of firms in our data, like literally millions of employers that pay salaries, and we need to match them with some industry code and so on. And we have kind of to do this manually or by fuzzy string matching. Has been a little bit of a nightmare, but we're definitely interested because we think that, again, as we showed, sectoral composition in general seems to be, important. And about your caveat, so what you are saying is not the people that were most affected becoming more better at adapting, but the people that were not affected at the beginning being affected after. That's what you're saying? Yeah, we should that's one possibility we could look into that. I mean, again, right now what we're trying to do is looking at whether people, what are the sectors they work on, whether they change sector following the pandemic, or we also have this very interesting, idea about trying to map what people continue to work from home as opposed to what people come back to work, because we have we're going to have all their expenses with credit cards. So we will see over the course of the day where they spend their money around their home versus around the workplace. So again, my answer is we're going to try to do a lot more on this. But again, it's one of the downside of this is that when you have this huge data, you tend to advance a little slower than you usually do. But again, we think the potential is worth the cost. But
great. Okay, listen, thanks very much. I'm afraid we're out of time. So thanks very much, Ruben and Discussants, for getting us off to such a great start. Next up is Uta, who's going to be talking about schools, and you have 20 minutes, Uta.
Yes, thank you very much for including our paper here in this panel. This is joint work with my colleague Kirill Brusiak and Clara von Bismarck-Osten. Clara actually wrote her master dissertation on this topic last summer, and she's now a PhD student at UCL. Many countries, including Germany and the United Kingdom, closed their schools during the first wave of the pandemic in spring 2020, last year, and often fully reopened only after the summer. Several countries, once again, including Germany and the UK, closed schools again during the second and third wave of the pandemic in the winter of 2020 or 21. Although it should be noted here that some other countries, including Switzerland and France, have kept their schools open even at times when infection rates were very high. School closures are a controversial containment measure because of it's the large costs, not only in the short term, but also in the long term. There is evidence that suggests that school closures are detrimental for the mental health of children. There's also evidence, as we've heard yesterday, that school closures are likely to widen learning inequalities, so they hit some children much more than others. And also school closures may have negative impacts on the careers of parents and in particular mothers. So this paper is about the benefits of school closures. So we ask, are school closures effective at curbing the spread of the SARS-CoV-2 virus? Or put differently, do school reopenings accelerate the spread of the virus? And here we first look at the infection rates of children, the group directly affected by school closures. It is important to note here that children almost always experience only mild symptoms. So the rationale behind school closures is not only, and maybe not even primarily, to protect children, but also to curb the spread of the virus in the adult population. I want to flag here right away that there is likely not a single true effect of school closures on the transmission of the virus. And this effect rather is likely to depend on how schools operate. I will provide more details on that later. Also, what activities children and parents do instead of school, and the local situation when schools were closed or reopened. In this paper specifically, we then ask, did summer school holiday closures help reduce the transmission of the virus? Did the summer holiday school reopenings contribute to the emergence of the second wave and the increased share of children among confirmed cases? And did fall holiday school closures help reduce the transmission? So what are the advantages of using school holidays when addressing this question? And here we really build on Jerome Adler's work. So in Germany, the start and end dates of the summer and fall holidays vary across the 16 states. So the earliest and latest start of the 6-week-long summer holiday was June 20 versus July 31st. Similarly, for the 2-week long fall holiday, in some states, the fall holiday started as early as October 3rd. In other states, only on October 24th or October 31st. Now, importantly, the whole school holiday schedule was decided upon years in advance and was unaltered by the pandemic. Regional variation in school closures within a country is often rare, but if it occurs, it is often the consequence of the dynamics of the infection rates in the region. And this makes these regional school closures problematic to use to understand what the causal effect of these school closures are. Another advantage of using school holidays is that the start and end days of school holidays did not coincide with other containment measures, such as the closure of restaurants, pubs, or non-essential shops. Local school closures or also national school closures that do not arise because of the school holidays, in contrast, often take place at the same time as other containment measures, which makes it impossible to disentangle the effect of school closures from the effect of other containment measures. So let me give you some background information how schools operated. Before the summer holidays, well, first of all, infection rates tended to be very low, and schools operated at a partial capacity to ensure social distancing between children and teachers. At the same time, a set of policies was introduced aimed at limiting the negative impacts of schools on the transmission of the virus, including ventilation in schools in regular intervals, hygiene standards, what to do if a child shows symptoms, and what to do if there was a confirmed case in the school. After the summer holiday, teaching started at full capacity. Children were put into contact groups within which mixing was allowed. Masks, with the exception of two states, were not compulsory. There was no wide-scale testing before the start of the school or during school. And the same policies regarding ventilation, etc., remained in place. I want to highlight here two nationwide policies that were introduced during the summer holiday and that I think are important for what we are doing. On August 1st, the federal government waived the cost of testing for those returning from travel. And on August 8th, it made testing for travel returnees compulsory if they return from high-risk countries. So infection rates started to increase in late summer, but they were still low. Then now turning to the fall holidays, here we are in a situation where infection rates were a bit higher than in the summer. There was a partial lockdown announced that came into announced late October. This does not affect our analysis because this happened after the start of the school holiday. And also several states started mandating mask wearing, but once again, this is not very relevant for our analysis because this concerns the period that we do not analyze here. The data we are using comes from the Robert Koch Institute, and the institute records infections and deaths by age brackets, by districts where the positive case is registered, and the reporting date, the date when a case becomes known to the local authorities. In terms of age brackets, we consider 4 age groups: school children between the age of 5 and 14, and 3 groups of adults, 15 to 34, 35 to 59, and 60 plus. So this is how the Robert Koch Institute reports the data. We normalize cases by the age bracket specific regional population in 100,000 people before the pandemic. And our study period here refers to June 1st until October 28th. Our methodology is a difference in difference framework with staggered adoption of treatment. We consider 3 treatments: the summer school closures and reopenings, and then the fall holiday closures. So here we are in a setting where every unit at some point becomes treated. So some children just have, so all children, the holiday will start for all children at some point, just some children have to wait longer than others. So it has been shown that in such a setting, when the effects of treatment are heterogeneous, commonly used models may not yield robust estimates. So we start out with the true causal model that explicitly allows for treatment effect heterogeneity. So here the infection rates at day t in district I depend on the district fixed effect, alpha I, on a day fixed effect, beta t, and DIT is then the treatment indicator, referring to the 3 types of treatments. Tau IT is the treatment effect that we allow to vary by district and by date. We then employ the imputation estimator developed by Kirill and co-authors. So what we do here is we first estimate the district and day fixed effects on a subsample of untreated observations. We then obtain an unbiased estimate for each of the district and day specific treatment effects. Now, these are, of course, not useful just on their own, but we can average them in meaningful ways. And here we focus on average treatment effects, age days since treatment. So I want to highlight here that this estimator is available only for those days between the earliest and the latest start date observed in the sample. Okay, so for the summer holidays, the gap between the earliest start date of the summer holiday and the latest would be 5 or 6 weeks. So this means we can only identify the effects of school reopenings, say, up to 5 weeks. And even that would be based on just a few states or 1 state. So let me begin with what we find for summer holiday school closures. So here on the left-hand side, you see the raw data, infection rates of children normalized per 100,000 K, where the vertical lines refer to when the summer holiday started. And well, basically what you should take away here is you can't really depict any clear pattern between the start of the summer holiday and what is happening to infection rates of children. On the right-hand side, you then see the estimates from the imputation estimator. The red estimates refer to the pre-period before the schools closed because of the start of the summer holiday. The blue dots refer to the estimates after the summer holiday started. And you can see all estimates are closely tied around 0. So there is very little evidence that school closures had an impact on the infection rates of children. Here you see estimates also for other groups, adults between, let's for example take adults in the age group of 35 to 59. So estimates are close to 0. Overall, what you should take away here is that there's little evidence that school closures reduced infection rates, either for children or for adults, bearing in mind this was a situation when cases were low. So let's move on to the summer school reopenings. And I should mention here that here we essentially assume that the effect of school closures because of the summer holiday was 0, in line with the evidence that I've shown you here. So this is the raw data referring to the state where school holidays ended first. And here you actually see a rather interesting pattern. So it looks like that infection rates of children increase in the days, and so in the first week or 2 weeks before schools actually reopened. Once school reopened, on the other hand, cases seem to go down. Okay, so let's look what is happening if we move to other states. So the orange line here now refers to states where schools started, where the school holiday ended a little later and school started a little later. You see the very similar pattern once again, right? So in the days leading up to the school reopenings, cases go up. Once schools open, cases go down. It's for the third group of states where the school holiday ends even later, the evidence is perhaps not as clear, but again, you can see an uptick in cases before schools actually open up. And well, this is what is happening as more and more states then open up their schools. So in this picture, you then see the evidence, the estimates based from the imputation method. So once again, it looks like in the first week, in the week just before schools open up, so in the last week of the school holiday, infection rates of children go up. Schools open, they go down. Okay, so first of all, this really suggests, so it's unlikely that this has anything to do with kids actually meeting in the school. So instead, what to us seems the most likely explanation for this initial increase and subsequent decline is the increased testing and the higher infection rates of travel returnees. This pattern you can see here is more pronounced in districts with higher infection rates and in more densely populated areas. You can see a negative effect here in this picture after 7 days of school reopenings. I should note here that this disappears if we drop the southern states, so it is not fully robust. Moving on to the adults, again, what you really cannot take away from this picture here is that school reopenings increased infection rates of the adult population. So if anything, actually they reduced the infection rates of the adult population. But once again, this pattern is not fully robust and depends on whether or not the southern states are included or not. Here you have some point estimates. Overall, the key message is that there is really no evidence that the reopening of schools contributed to the emergence of the second wave or the increased rate of confirmed cases among children. What about the fall holidays? So cases in the fall were higher, and perhaps school closures are a more effective containment measure when cases are higher. So let's first look at the infection rates of children. On the left-hand side, you see the raw data. And well, our takeaway from this is, October, when these fall holidays take place, is simply a period where we see a strong uptick in cases in all states that does not appear to be related to when the fall holidays actually occurred. So overall, the pattern here looks to us like just a general time trend. Infections overall increase. And indeed, if we then look at the imputation, the estimates based on the imputation method, they are, well, close to zero, admittedly more noisily estimated than for the summer holiday. So there's also little evidence that fall school closures reduced infection rates of children when infection rates were higher to begin with. Turning to the adult population, a similar picture emerges. So once again, you can see that infection rates of adults between here 35 and 59 generally increased through the month of October, but it did so across all states, regardless of when the fall holiday started. And once again, estimates tend to be close to zero, not only before the fall holiday, but also after the holiday. So overall, little evidence that fall school closures reduced the infection rates of adults. Yeah, I am actually ready to conclude. There's little to no evidence that holiday school closures and reopenings contributed to the spread of the SARS-CoV-2 virus throughout the summer and fall 2020. You probably have been thinking and may have been worried about external validity here. So we note that the summer and fall study period that we focus on the one hand, precedes the emergence of new, more infectious variants, such as the British variant. On the positive side, on the other hand, vaccinations of the adult population are ongoing. And this would actually be a reason why we may want to be one reason why school closures or why school reopenings so they would go in the opposite directions as the infectious variants.
Okay, thank you very much indeed. So our first discussant is Alexandra Roulet. Alexandra, you have 10 minutes.
Hi, so I'm gonna show my screen. Sorry. So
Great, thanks.
Can you see my screen?
Yep.
Okay, but it's not full screen, no? Or is it good?
It's not very full screen. It's okay.
Okay, let me try just like this.
I think that's as good as you're going to get.
Okay.
Oh, well done. Yeah. Perfect.
So thanks a lot for inviting me to discuss this great paper on the role of school closure in the transmission of the COVID-19. I'm currently experiencing the school closure because in France, school just closed 2 weeks ago. So this seems both kind of very relevant in, from the policy debate throughout the past year, but also from personal experience. Let me just start by saying the takeaways of the paper. I think this is a very nice paper. It provides to me convincing evidence that schools have played a limited role in the transmission of the virus over the summer and the fall of 2020 in Germany. And I actually tend to think that this is probably externally valid to that, more generally to the period of the summer and fall of 2020. Now, there's a second finding, which is interesting, which is that actually the authors document an increase in cases just before school reopening at the end of the summer. And so they show in the paper that it's probably due to returns from travel. So they show that there is both kind of more testing going on before school reopen at the end of the summer, but that the share of positive tests among the tests stays stable. So that suggests that it's kind of both, there is more testing, but also there is more infection from people returning from a destination that might have had more cases than Germany. There's actually a third finding that the author don't really want us to take away, but that is that when the school reopened after the end of the summer, the confirmed cases actually decreased. So the authors don't really want us to take this away because, as Uta mentioned, it's not robust to dropping southern states. I did find this result a bit puzzling, and maybe one thing that I have been wondering that maybe the authors can elaborate when they, in the discussion later, is that in the appendix they provide results with alternative specification like more conventional event study or the Duchesne-Martin d'Hautefeuille estimator, and in these we clearly see the the decrease in cases. And it was not clear to me if these were done dropping or not the southern states, and how to think more generally about this result. Let me also mention that there has been contemporaneous work by Isfording, Lipfert, and Pestel that's used in part the same variation that is used in this paper. This other paper just look at the return to schooling after the summer holiday, and they also find no role of school reopening on the transmission of the virus. It seemed to me that they didn't find the increase in cases just before the school reopening. So I was wondering if this had to do with difference in the specification, in the window they chose, or in where exactly was the difference coming from in terms of finding number 2 between these two papers. So let me highlight again the strengths of the paper. As I say, I think it's a convincing paper because the source of variation that they use is very convincing. So it's clear that the timing of school holidays is decided upon years in advance. It's also nice because, contrary to, for instance, the first school closure last March, it does not coincide with other containment measures. And that's also why they dropped the reopening after the fall holiday, because that one would have coincide with other containment measure. So this, the variation is very clean, and the specification is also very convincing, following recent work by Kirill, trying to use this imputation estimator to tackle problems when all the observations are treated and you don't have a true control group, and there might be heterogeneity in treatment effect. So that's why I really emphasize that the result seems very convincing to me. The data is of high quality. It's daily data on cases. It looks like we had this problem in France, but it looks like from the author what they say was not true in Germany, that we didn't necessarily have the results of the test on the same day, in particular in the period that they look at, which is after the summer holidays. But it looks like this is not an issue in the current German setting. And also a nice thing is that they have the ability to use various counterfactual, in the sense that when they compare the school closure at the beginning of the summer holiday, they are comparing no school to a school at partial capacity with a lot of measures, etc. Whereas when they look at the reopenings, they are comparing no school to school with full capacity, etc. So this also allows to see various counterfactual comparison. Obviously, the author mentioned it. The main concern is external validity. I think, there are potential other concerns that I don't find really a big problem. So there is the concern that, in theory, you could, there's this assumption that the tests are done on your place of residence, and you could think that when you have vacation, you test elsewhere, etc. I do find it quite plausible that people mostly test on their place of residence when they come back. There are also potential concerns about did the testing of kids evolve over time. But to me, what I really take of this paper is what happens to the adult population. I think, as was mentioned, kids always had mild symptoms. So it is mostly about the spillover to the adult population that justify potentially school closure. And so again, I don't find these too concerning. There's also, of course, also the question of the window at which you're constrained by the estimator to only look at most 3 weeks after their school reopening. But again, I find this to be very minor concern. On the contrary, when it comes to external validity, there is. So there is two concerns that, so there is a discussion by the authors in the paper saying that things could go both ways, because the new variants of the virus seems to have maybe be more contagious. My understanding from talking with pediatricians is that they also specifically have higher transmission among kids and potentially from kids to adults. But as the author stressed, there's also more vaccination. So you could imagine things going both ways. And another concern about external validity is that Germany had lower cases than most countries at the time of the study, even in the fall period, which was added precisely to try to get at this issue that the summer was mostly a time of very low cases. Even then, the cases where it was the beginning of the second wave, but cases where I think, for instance, not as high as in other countries or at other times. So I don't know to what extent there is much that can be done at this stage about this. I guess in theory, because schools have been, if I understand correctly, closed in Germany after the winter, so they did not reopen. I don't know if there is anything with the Easter holiday. I mean, maybe this is not for this paper specifically, but I think it would be interested to look at how this, with the same method and the same source of variation, how things have evolved in the more current period. And yes, I think it's important to take these results for, with this grain of salt that they apply to a specific setting where infection rates were low and it was the original virus that was predominant. But besides this, I really enjoyed the paper, and I think the results are very convincing.
Thanks very much indeed. The next discussant is Gabrielle Fack. Do you have your slides, Gabrielle? Is Gabrielle with us? See.
Yes, I'm here.
Okay, sorry.
I'm going to share my screen now.
Thanks very much.
Let me. So I'm trying to share it in a way that would be. So you don't see it completely.
We can see it. It's not in full screen, but we can see it.
Okay, I'm trying to put it full screen. Somehow I don't see how to do it.
Is it présentation? Affiché.
Yeah. Okay. So I think I'm going to go very fast on the main takeaway from the paper. I think it's been well summarized before. Just one thing I wanted to highlight is that so these school closures, I also experienced them personally, but generally UNESCO has been a very interesting work trying to count the number of weeks where schools have been closed, and as of January 2021, on average, they had like most countries had experienced on average 20 weeks of partial or complete closure, which is really very important and is really something that never happened before. So I think that as Alexandra was pointing out and emphasizing the credibility of the paper comes from the estimation strategy and the fact that school holiday closures are determined well in advance, and it creates this very nice natural experiment, in particular for the summer holiday, where the gap between the states that close school the earliest and those that close school latest is quite large. So it's really provide quite a lot of power for identification strategy with a lot of control states that are not yet treated when you look at school closure of the earlier states. Whereas for the fall closure, it's a much shorter time period because there are only at most 16 days between the early and late closures. And the findings have been summarized already, so I'm not going to say them again, but I just want to emphasize again that the paper is really credible because most of the papers that have been done on the subject, they are not able to have this kind of natural experiment that disentangle school closure from other measures that have been taken at the same time to curb the evolution of the pandemic. So I think that what's really important is really to assess the assumption of parallel trend, and as has been shown, it seems that the assumption holds very well for days preceding the summer and fall closures, but there is this surge in cases before school reopenings in the fall, which you could say might threaten the validity of the estimation strategy. And so in the paper, it's hard that basically it's driven, this surge in cases before school reopening is driven by families returning from more infected countries. But it would be nice to kind of maybe document a little bit more this. Like typically, as far as I understand, Germany is a country where Germans actually travel a lot abroad for the summer. But maybe during this time, like in France in particular, there were lots of restrictions. So the number of people traveling abroad was reduced a lot. And so it would be maybe nice to actually kind of really follow this explanation and maybe show if there is a way to show an intensity of traveling, with data on flights or things like that. And also, so you've talked about the number of tests, but can you show as well that really if you could show graphically, maybe you've done it, but I didn't notice that, basically redoing the analysis on the number of tests. Okay, and I think it's really important to understand whether really the introduction of the mandatory testing actually had an impact. And I will also come back to that because maybe it's also really, there is this idea that it's very important to test people before going to school. And is it something that really matters here? So maybe if you can kind of try to find ways to dig up a little bit this kind of strange result, especially because then, as Alexandra was mentioning, you find in several specifications a negative effect after school reopening. Is it due to the fact that there were more people tested and so they got isolated and then this is actually an effective measure, or is it actually the fact that going to school is it creates a lower risk of transmissions than traveling abroad? So then on the fall results, what's a bit maybe what you would like to see a little bit more, a larger time window, because so what you see is that the effect is not significant even at the aggregate, but the point estimate seems to be negative. So one is wondering whether you had a larger timing window, would you allow it? Would it allow to see an effect? Of course, you can do it, but there is still this question. And in particular for, so this is the graph for kids, but for parents, if they are contaminated by their kids, you would expect that the effect is going to show up later. So the effect on adults, you would see it later. So I was wondering whether you could still try to see, at least for adults, could you try to add one more week and see what happens? Or is it really not possible to do it with any of the specification? And of course, the question is, okay, so if we don't find any effect, what can explain the effect? So what are the mechanisms? Is it that at the time of the circulation of this type of the virus, there was a lower level of transmission of the virus? Is it because there were measures that were implemented within schools that were actually efficient? Or is it because when schools were closed, there were no, the reduction in contact was quite limited, and so being in school or out of school doesn't make a huge difference. So maybe it would be interesting to document a little bit what do children do when schools are closed? Do they stay with their parents? Do they go to summer camp or whatever? So then, of course, I agree with Alexandra that the internal validity of the paper is really quite high, and in particular with respect to the other papers. And so this makes the paper very strong on that. But the question is, of course, more the external validity. So I just pointed here the cases for different countries, just to show basically the German cases. So in the summer, clearly it was a period where there were very low cases. And then in the So around the time of the fall holiday, there were more cases, but compared to most European countries, it was, to some European countries, it was still a quite low level of infection. So there is really a question of what would be the effect of school closure, basically, if a country like France had decided to close school at the same time. And I think it goes back to the question of how school closure interact with other types of containment measure. So either measures that are taken outside of school, in particular related to the way testing is going to be done, and also measures taken within school. So as far as I understand, for example, there were only very few states that mandated masks in school. But one thing that in France seemed to actually have made quite a, I don't know whether it was effective or not. We don't have the way to evaluate this, but at least it seemed to be important, the policy regarding what to do when there is a positive case in the school. And actually, the rule of what to do has changed quite substantially over time in France. So in the beginning, they said you need to have at least 3 confirmed cases in a class to close the school. And then it changed with the arrival of the new variants. They said, okay, only 1 case, and then you close the class. And then the question was whether you close the class or the school. And of course, maybe there is some variation across region and this. I don't know whether you try to document this, and it could be interesting. And the last thing I wanted to point out is that so one thing that was discussed extensively in France was that kids were put at risk during lunchtime because when they had masks, at least they were mixing much more during lunchtime at cafeteria. And I'm not very familiar with the organization of the school day in Germany, but my understanding is that most kids go to school only in the morning. So could it actually affect the results compared to other countries? I'm going to stop here.
Okay, thanks very much indeed. Okay, so we have quite a few people in the queue. So, and I want to make sure that everybody gets to ask their questions. So if people could keep their questions relatively brief, and if Uta could keep her responses relatively brief, so everybody can say what they want to say, that would be great. So Guillaume Chapelle is first up.
Thank you very much. So thank you very much for this very interesting paper. I was just having some question about the relevance of looking at infection rates, because as you show, like following, you can have very different mortality levels for very similar mortality levels for very different infection rate following the beginning of the pandemic, the middle of the pandemic, the end of the pandemic. And so I think testing is something that is an indicator that is very, very, very messy. In particular, I think in Germany, those tests are quite expensive. It's 80 euros. If I'm thinking only France is the only country where you don't pay for those tests, but in other countries you have to pay it. So I guess people will be reluctant following the moment to get there to get tested. So then how reliable are those tests? So shouldn't we rather follow the mortality 20 days afterwards? So this is, I think, a question that popped to my mind, in particular in the case of COVID, where okay. I think this is the fact that we don't have a random sample of people that you randomly tests to follow the epidemic, raise some question on their measurements. Thank you.
You're muted.
Yes. So yeah, I can answer that question right away. I think infection rates are informative. But I do take your point that maybe mortality is, well, it's certainly a very important outcome measure. We did look at mortality rates. The risk of mortality is very low. And given that we don't find any evidence or very little evidence that school closures and reopenings affected infection rates, you will probably not be very surprised that we didn't find any evidence either that the school reopenings and school closures had an impact on mortality rates. But those results are in the paper.
Thank you. Valeria, Merlo is next.
Thanks. Yeah, my question in general, well, I get that it's really appealing to use closures and reopenings due to holidays. Is it the right counterfactual now? The relevant policy question now is, does it help to close schools when cases are going up? And so why don't get wet and use the closures due to COVID containment to answer that question? One thing is behavior of people is different if they are in vacation or if they are under homeschooling. And there has been some variation in the last couple of weeks across states regarding when schools had to close because due to the attempt of containing the pandemic. And you can use the number of cases at the county level, which is very heterogeneous across states, to try and take care of the endogeneity of the closure. But also, I think it's very important to look into that because we have now the problem that there are these emergency groups in the schools set up that might be worse than having the children attending in their classrooms, because in these emergency groups there are not there's not enough personnel, and the so-called contact groups get mixed. And there has been a difference between last year, where these emergency groups were only for essential workers, and nowadays where basically anyone with a certificate from their employer can send the kids to those groups. So it's more a general comment. I get that it's nice to have this exogenous variation, but on the other hand, we're worried about whether it helps to contain the pandemic now.
Yeah, can I reply to that? No, that I completely take your point, of course. Yeah, and Alexandra also hinted at, could we possibly use the Easter holidays and adopt a similar framework for what is going on right now? My impression here is there is not sufficient variation in the start and end days of the Easter holidays in Germany. Plus, there is for now we're also in a situation where the different states in Germany have adopted different policies to the pandemic. So that makes it much more complicated to analyze the questions of school, of the roles of schools now. Of course, it's very important. You actually hinted at a very interesting idea, Valeria, which I think is worth pursuing. So within a state, even if the rules regarding school closures are the same, we have variation based on the initial infection rates. So one could try to understand whether the school closures have different effects in different districts where the levels were different. But this is very challenging, right? Because it's also not clear that we would expect infection rates to develop similarly in these two types of regions. But your point is well taken. Yes.
Ghazala.
Thanks. So I think that the paper is extremely policy relevant, and sort of just building a bit on Gabrielle's comment, I think what would be really kind of important to understand, I mean, from the point of view of the policy, but also from the point of view of external validity, is to kind of understand whether the effect is that you're finding is because there's really no spread across children and no spillovers, or whether it's really to do with the sort of containment measures that were taken within the school. So the use of things like social distancing, masks, other sanitary measures. So I wonder if there's a way in which you can kind of get at some of this.
Yes, thanks again, Ghazala. Very important point. So we've researched this intensively, and to the best of our knowledge, the policies on how schools operate are very, very similar across states. So there is really very little hope in trying to use variation across states or across other local areas, trying to understand, well, what role ventilation, what role mask wearing, what role handling of positive cases what role they play. So, but it is, of course, so that's why I really also try to spend a significant amount of time giving an overview how schools operate, because they operate very differently from how they operated a year ago. And this may well explain why, at least for the study period we looked at, schools played a limited role in the transmission of the virus.
Thanks very much. Next up is Moritz Kuhn.
Thank you. It's really wonderful and very careful data work that was very fascinating. I just want to reformulate a little bit Valeria's point from before. I think school closures, just from an economic theory perspective, might be very different if I know it 4 weeks in advance, where I can take measures, where I can make plans, or when I get noticed on Friday that the school is not going to open on Monday. And I think that's particularly relevant for school holidays, as you said, because they are known like weeks and years in advance, so that people can make plans. And like as a German, I can say this: Germans perceive traveling and going on holidays as a human right. So and also relaxing, hanging out at the beach. So I think one point that you had on one of your first slides is like, what's the relevant control? What do people do if they are not at school? Is very effective. It's very important to assess how these policies actually can contain the spread of the virus. And also related to traveling, that's more a measurement question. Like you said that a lot of the increase in the cases was actually from people returning from travel. And there the question would really be like, where are these cases reported? Like if I fly from, let's say, Mallorca back to Frankfurt, and I'm tested at the Frankfurt airport, is that then going to be reported as a Frankfurt case, or is that going to be reported, in my case, as a case in Bonn? And that is also maybe relevant because you emphasize that, like, if you exclude or include the southern states, that makes a difference. I expect that many Germans travel over the southern border, and so if there is like testing stations of people returning from, I don't know, Italy, Austria, France, where exactly these cases are going to be recorded, whether they are really at the place of residence or at the place of the test, I think that would also be important to know and emphasize.
Yeah, regarding this last point, where the cases are recorded, we did some interviews with the Robert Koch Institute to learn about exactly that. Our understanding, although this is very hard to really prove, is that cases typically, if not almost always, are recorded in the place of residence. So Bonn, in your example, not Frankfurt. Yes, we also tried to do some robustness checks, and we excluded areas like tourist areas, for example. I mean, that has very little impact on our findings. So I don't think this is a huge issue, or it really massively affects our findings. So why does it matter whether the southern states are dropped or not? This to us looks a bit more, so this is not so much where cases are recorded, but cases in these areas simply evolve differently from some other states. Yeah, so now that we talk about these southern states, I wanted to come back to the questions Alexandra raised early on in her discussion, and why our results seem to differ a little bit from the contemporaneous paper by Ipschording and co-authors. Yes, I think this has a lot to do with what to do with the southern states.
Okay, we're almost out of time, so I'm going to gather questions. So, and then you can maybe respond if we have time. So Joan is next.
Yeah, so extremely interesting paper and extremely policy relevant. Obviously, whether policy should be adopted or not is one should value the costs of the policies. So I guess my question is whether you can use sort of the highest benefits that your estimates imply and contrast those with back of the envelope calculations against the costs of closing schools, perhaps estimates on the returns to education, etc.
Thank you. And then we had a question from a YouTube viewer, Stefan Pollinger, I suppose. Why do you use a model with an additive effect on case numbers? Shouldn't the treatment affect the growth rate of cases? Did you check if it does? And then the last question is from Jérôme Ada. Jérôme.
Yeah, hi. I just wanted to suggest yet another outcome to look at. So you look at cases, but could you also look at the ratio of positive tests? So in the context where testing varies from day to day or week to week or region to region, that also give you some indication of how prevalent the disease is.
Very good. Okay, we're basically out of time. If you want to say something in 1 minute, Uta, go ahead, and then I think we all will take a break.
Regarding Jérôme's questions, we looked at ratio of positive tests. There are some problems with the data. The ratio of positive stats remained more or less constant as schools reopened or closed.
Okay. Thanks very much indeed. Thank you, Uta, and thanks to the discussants and to all of you. And it was a good session. So we now take, I think, a half an hour break. We will resume at 14:20 Central European time. So see you all then. Bye.
This is a team of Italian economists who are going to tell us when it is safe for whom it is safe to work from home. So Gaetano, the floor is yours. We don't hear you, Gaetano. I don't know.
Okay. Can you hear me now? Okay.
Yes.
Great.
Fine.
Thank you. So thanks for the editors for having us in this great panel. This is joint work with Tito, Alessandro, and Marco, who are in the audience, and might answer some of the questions. We're going to talk about unsafe jobs, labor market risk, and social protection. So in these 2 days of great presentations, we have seen that many COVID disrupted many aspects of people's lives, and especially labor market. So what we want to understand in this paper is how the labor market risk derives directly from a new epidemiological risk that is due to the viral transmission. And we see that these kind of risks are concentrated in certain groups of jobs and of people and of workers. But at the onset of the pandemic, we didn't know how to move in this space of COVID health-related risk and labor market risk. So what we want to do in this paper is to draw a map through an occupational classification that help us move throughout this space. And we identify those jobs that are at highest risk of viral transmissions. And with that, then we are able to exactly pin down and quantify the jobs and the workers who faces both risks, those that bear this intertwined risk. We believe that these type of job is extremely relevant for policy, and especially because at the onset of a pandemic, a crisis like the one we are suffering, we needed some kind of timely and effective targeting, both for safety measures on the workplaces and for a proper economic safety net. Of course, this paper is not the only one, and I just want to briefly mention the literature because it's a literature that exploded since March, April of last year. And so I want to be clear what people have done, what we can contribute to the literature. So the paper that everyone knows is definitely the paper by Dingle and Neyman, was the first paper, actually contemporary to our very first work, that provided a classification of working from home, so of jobs that were safe. Then there has been a lot of other papers since then. Monge co-authors extended beyond working from home, realizing that not all the risk and safety measures are the same, but their classification is not exactly suitable to identify, pin down, and quantify the workers and to design policies based on jobs and workers that bears different kind of risks. And then there are a lot of papers of people that are in the audience today and in the panel especially, that contributed by looking at often one dimensions of risk, sometimes others, namely of safeness, namely working from home. And they documented important impacts of women, job loss, income distribution and inequality, and even job search and labor supply responses. The last paper I want to mention in this not fully comprehensive slide is the paper by Fasani and Mazza, who highlights the risk borne by foreign-born workers, but especially because they classify also essential occupations that we will use later on in our classification of both health and labor market risk. So what we contribute to this literature are three things. So I want to be clear about this. We develop a richer classification. So as I kind of hinted to, the risk on the job is more nuanced. And so our classification is multidimensional in order to understand which jobs are at no risk, some risk, or very high risk at least. This classification allows to pin down the exact number and who are the workers in each of the category. And we have a cross-country comparison and quantification of this group of workers. Then the second contribution is to validate this classification with an ex-ante ex-post analysis in 3 countries, Italy, UK, and US, during the first pandemic wave. And last, we characterize the workers who are more likely to bear the risks in 28 countries. And I will conclude with some policy implications based on all this evidence. So the structure of the talk will follow these 3 pieces of contribution, and I will conclude with the policy implication. So let's start from the classification and specifically the health-related one. So we look at ONET, the description of jobs in US. That is developed by the Department of Labor. There are 968 occupations. We first identify 27 questions or tasks that tells us whether a job can be done from home or not. So we set up a threshold, which is arbitrary. I'll come back on this. And if the jobs satisfy all these 27 questions, which is a bit more than Dingle and Neyman, it's a bit more demanding, then these jobs are doable from home. For all the remaining jobs, we look at other 3 tasks that are related to the proximity, like physical presence on the work, proximity with other people, contacts with coworkers, and so on. And we identify 2 further group of occupations that entail some physical proximity or even contact with external people. And last, all the remaining jobs that are left out are the jobs that we called unsafe because they require a lot of proximity and interaction with other workers on the job. So we end up with a categorization of occupations of jobs, both in SOC for the US and we map into ISCO 3-digit occupation for the European countries. So I want to, as I said, I want to be upfront about what classification does not do. So it's arbitrary. All these kind of classifications are somewhat arbitrary. We provide full data methodology, both in the appendix and online, that can be informative for policymakers, and they make different decisions on the arbitrariness of the thresholds. And also it's fully based on pre-COVID task technologies and labor market institutions. And so we are not accounting for safety measures and behavioral responses after COVID. At the same time, the classification is more nuanced. It's multidimensional, and we can quantify exactly the number of workers in each group. So to give you a sense of how this distribution look like, we have 28 countries in this graph and 4 categories of safeness, of riskiness related to health and epidemiological risk. So unsafe jobs, the light gray bar, are pretty much uniformly distributed across country. The average is 47%. These are jobs that need to be done and need to be done in presence. What the differences are in the other categories, especially in the home working categories and the category of some physical proximity, because that depends on the production structure of the country. So countries like the United Kingdom, the Netherlands, or Luxembourg have a lot of people who can work from home because they have a developed service industry. And countries like all the East European countries instead have a lot of workers that need to be on work on the workplace because they have a more productive manufacturing economy. And so on this side, we have Romania that have a lot, for instance, a lot of workers that have some physical proximity and so on. So to complement our health risk classification, we look at the economic side, and we borrow the classification by Fasani and Mazza, who define providers of essential goods and workers that goods and services, that need to be provided every time, even during a pandemic. And sometimes they have to do this in presence. So in the end, we can construct this map in this space of COVID-related risk and labor market risk. On the bottom left corner, we have essential remote working occupations, jobs. So those jobs that entail little labor market risk, but also little health risk. For instance, lifestyle professionals can work from home, but we need those, some of lifestyle professionals, we need them during a pandemic. If we move on the right, then we have jobs that entails more labor market risk, such architects or civil engineers. They can work from home, but demand might drop during a pandemic. If we move up, we have higher health-related risk. Up to the top corner on the right, where we have non-essential unsafe jobs, and those group of occupations and then workers that work in those occupations are those that really bear this intertwined health and labor market risk, because if they work, they are at risk of getting infected, but at the same time, there might be government intervention, dropping consumption, labor supply responses that that make the demand for these goods dropping. So now that we have this eightfold classification, we move on to the validation, and we do a couple of different exercises. We look first at administrative data. Here we have data from the Italian administration that is responsible for workplace injuries, and so they have to pay insurance if there is an injury. And so they classify jobs and illness on the job with also the ICD code. And so we see that in their data, all the 2020 COVID-related claims were concentrated in unsafe jobs. More interesting is this graph that also is drawn with administrative data from INPS, the Social Security Administration. Here we don't know whether the sick leaves are due to COVID, but we have this overtime variation. And I'm plotting the raw data for unsafe and home working essential and non-essential jobs. The interesting thing that we see is that during the pandemic waves, especially the first one, both unsafe type of jobs had an increase in sick leave with respect to the year before, which is 2019. On the contrary, the variation is actually negative for jobs that can be done from home, especially for essential ones that very early on, even before March, responded to having fewer sick leaves, probably because they moved to working from home. So what the classification can do is can predict its other four things. First, we look at working from home, and we should see that these activities should go up for jobs that actually can be done remotely. Then we look at short-time work schemes, or more general, the intensive margin of labor, so hours, and we see that this we expect this to short-time take up to or furlough schemes to go up more in non-essential and unsafe jobs. The last two pieces are sick leaves, and we've already seen something of it, should increase most in unsafe jobs. On the wage side, we have more undetermined effects, but we can expect under rigid labor demand and the contracting labor supply, wages to go up in essential jobs. So the specification is very simple. It's just a pre-post analysis. We interact with our classification of riskiness and essentiality. And on the left-hand side, we have these four outcomes: home working, sick leave, short-time work scheme, and furlough, and wages. The excluded category is working from home. We look at labor force survey and CPS for Italy, UK, and the US, quarter 2 2019 versus quarter 2 2020. We also have evidence on quarter 3. So I will be brief on these slides to have some time to discuss the policy implication. I will just focus on the results that we care about, that we expect from our classifications. So we see that working from home increased the most for jobs that can actually be done from home. So on the reverse, during the pandemic time, the probability of working from home was much lower for jobs that need to be done in the workplace on site. Short-time work and furlough schemes, those should increase the most for unsafe and non-essential jobs. And indeed, for unsafe jobs, we see that in all the countries there is an increase of take-up of these schemes, even in countries where, like US and in UK, where these schemes were pretty much absent before the pandemic. With respect to sick leave, we do not do a good job in predicting the UK outcomes, but for US and Italy, as we've seen also from the graphs before, there is an increase in sick leaves. And what's interesting is that this higher probability of being on a sick leave is the highest for unsafe job with respect to working from home, even with respect to jobs that are in between that entail some risk, but do not have too many interaction with other people. And this is true both in Italy and the US. And last, for wages, as I said, like the predictions were a bit mixed and uncertain, at least for Italy, and to a smaller extent for the US, we see that for essential jobs, there is a premium during the pandemic that is consistent with the rigid labor demand and contracting labor supply. So who are the workers who are facing these intertwined risks? Here we draw evidence from 2019 European Labour Force Survey and CPS to characterize this group of workers given the occupation they are in. If we just look at the health-wise, it's more likely to find a young person in a very risky occupation, and it's the opposite for people above age 25 to be in a remote working group of occupations. Women are actually overrepresented both among jobs that are very safe and jobs that are very risky. On the other hand, low educated people are very much, it's much more likely to find them in the riskiest group of occupations, especially from epidemiological risk. There are other interesting patterns with respect to city size, working, as we see also yesterday from Stephanie's presentation, working from home is more, it's easy to be seen in metropolitan areas. Smaller firms instead tend to be associated with higher risk. What's interesting is that we find very little differences across countries in the EU and between the EU and the US, and in terms of which group is in this which group of workers is in this group of occupations, and there is more in the paper. If we zoom in onto the group of workers that have the highest risk, because they have both, they're both unsafe and non-essential, so they are they bear the risk from an health and an economic point of view. We see that there are mainly young people, low-educated workers, and temporary workers who are bearing they are concentrated in this kind of group of occupations, and to a certain extent also women and immigrants. Now, I want to conclude in the last couple of minutes with the policy implications. And there are two sets of policy implications I want to discuss with you. So the first one is from the economic point of view. So we have seen there are these vulnerable groups of workers, and some of them were probably vulnerable because of the two-tier labor market that was mentioned also in the previous presentation. But these gaps were probably exacerbated because of the COVID-related risk. And this is particularly true for small firms and self-employed workers. To a certain extent, the policy intervention was extended to cover this kind of group, especially with respect to short-time working schemes or furlough schemes. But still, the take-up is low, and so probably we need to focus more on protecting these kind of jobs. On the other hand, banning layoffs could be counterproductive because we do not give opportunity for younger people who are those at labor market risk to enter in the economy, as small firms may go bankrupt anyway, so it's better to subsidize them to a certain extent. There are a couple of implications with respect to unemployment insurance. We need to think of extending unemployment benefit to those with short contribution records, and because we have seen young people are those at highest risk, if there is an experience rating mechanism. At the same time, we want to extend unemployment insurance duration as moral hazard is a second order concern during a pandemic. Last, we want to, from an economic point of view, we need to encourage somehow mobility of workers toward expanding activities, such those that are really essential in a pandemic, like health, pharmaceutical, logistics, and sanitation. And we might want to intervene into these jobs because we have seen that those jobs are really essential, but they're also unsafe from individuals' health point of view. So we might want to give some kind of wage insurance, training, or hiring incentives for the sectors and firms in order to attract workers into these jobs. Last, I want to discuss a bit about the health implications. So we're not suggesting anything about how vaccination should be done, because probably age is the best criterion to be used, and we're not the health expert. But if somehow, and in some countries it has been done, priority is given to certain categories of workers, we need to focus on those that have the highest risk. And we need to focus, for example, on those that are cashier, food preparation assistants that are very bear a lot of risk. At the same time, migrant workers are working unsafe and essential occupations. We need probably some more, to a certain extent, regulation and health insurance coverage. So I think it's about over time. I just want to stress that the evidence from of our paper are really important to build up an ex-ante classification that can inform policy decision in a timely manner. And this it's still important in the transition to normality, and probably to a certain extent also for some from some time, since vaccination rollout is being kind of slow, especially in some countries, and we want to protect these workers both from an health and economic point of view.
Okay, thank you very much. Very nice presentation, just on time.
You.
So the discussant is the first discussant is Joan Bonras. So Joan, the floor is yours.
Okay, so you can hear me now.
Yeah.
And for some reason, so the present, you don't see full screen. No, I don't know why it's not moving into full screen.
I think it's fine.
Okay, well, fine. Okay, so thank you very much for asking me to discuss this very interesting paper, which perhaps different than some of the other papers that we've seen. It's really a measurement paper. Okay, and so what I'll try to argue here is first that it's important to have these measurement type papers in order to address some of the concerns associated to COVID-19, and then I'll make two bigger suggestions and perhaps some smaller ones. So there's no surprise that COVID led to one of the largest economic crises of the century. So we've seen ample evidence of this. Second important thing is that this economic crisis is quite different from standard business cycle fluctuations in a number of dimensions. One is the deepness, but the second one that has also been quite emphasized in previous presentations is the heterogeneity on who's being impacted by this crisis. The third aspect, which we still don't know, is its length, which may be actually quite important for some of the policy discussions that the paper addresses, right? It's not the same whether the recovery from this crisis is fast or is long-lasting, and whether this recovery is related to the initial heterogeneity or not. The dimensions of this heterogeneity are many. So one is the burden of school closures, as has been discussed also in this workshop. Also, the importance of social distance measures for different jobs. One of the important questions is, can current policy deal with these special features of this crisis? And here's where sort of this paper comes in, which is an important policy target is to deal with job vulnerability. And this, as has been explained, has at least two dimensions: what jobs are risky in a health kind of sense, and what jobs are essential in the eventual of lockdowns. And here, the challenge is to identify or to, whenever we want to implement policies to help those jobs that are more vulnerable, the challenge is to measure who these workers are. And in standard data sets, really what we have available is sector of activity, occupation, some worker characteristics. And so the key question, or one of the key questions, is really how can we use this information to really do a good job at targeting or knowing which are the workers that suffered more from the crisis. There's some steps in the literature. So obviously the most prominent is probably the Dingle and Neyman paper, which classifies jobs that can be done at home based on ONET data. And this paper is actually quite related to this one. What are the main differences is it introduces more nuance to this dichotomous classification. It checks whether the classification predicts actual labor market risks, and it describes affected workers across many more countries. So I'll mention on some of these issues in what follows. So the main suggestions the first main suggestion is that it's quite important for the paper to distinguish this paper from previous contributions to the literature is really an exposition of the algorithm that allows to select what type of jobs can be done at home and the other categories that this paper identifies. In the Dingle and Neyman paper, the criterion, I find it's pretty clear and very clearly explained in the paper. So in words, if a specific task that requires interaction is done by majority of the respondents, then the default is that this job cannot be performed at home. So it's what this paper does is a little bit sort of the reverse, right? Is basically thinking what types of jobs can actually be done at home, through the various responses in the questionnaire. So I think that most of the explanation of how this is selected is done in the appendix, and actually it's quite central for what the contribution of the paper is. So I would encourage the authors to really put it, give it a more central role in the paper. And second, which is related to also how closely this paper is to this Dingle and Neyman JPAP paper, is how the two classifications differ. So like the coarser one in Dingle and Neyman that computes what jobs can be done at home versus not at home, versus the classification that is built from activities that can actually be done at home. Okay, so that would be my first suggestion. Second suggestion, which I think can improve also the paper, is to try and think about how precisely can we measure these job safety measures. So I found particularly useful in the paper, using data for Italy, that the classification can predict work injuries by job time, the time series of sickness benefit claims by job time, and exposed labor market outcomes. A little bit what I lack from the paper is a notion of how much of the variation can these classifications explain, right? So in other words, is it the case that these four categories pick significant differences between jobs in different categories, or is it that it picks most of the variation that exists in the data? And so doing steps towards answering this more quantitatively, I think would be quite useful. Couple of extra smaller suggestions. So in the paper, not much is done to exploit the timing of the different waves, and there is a lot of variation there in Italy, and perhaps that can be used to validate even further the measures, and also to quantify how well the measures are picking up the workers at higher risk. And then the final point is that I think that paper would benefit also by making the policy recommendations a little bit more specific, perhaps relating them to programs that have been implemented in different countries. Things like this, I think, would clarify the policy recommendations. So in conclusion, I think it's definitely a super important key policy challenge to identify the losers in a short that is extremely heterogeneous, or is felt very differently across different types of workers, and definitely the paper contributes to this challenge.
Thank you, Juan. So the next discussant is Sofia Barani. Sofia, the floor is yours.
Thank you. So can you see my slides?
Yes, very well.
Okay. Okay, so thank you for asking me to discuss this paper. As Joan, I also found it very insightful. And so what does this paper, the paper mainly asks 3 questions. And the first one is which jobs are at risk? And here is the main contribution of the paper, I think, that they combine health risk with labor market risk. And then they validate this classification in 3 ways. And then once they've validated this classification, they look at what characterizes the individuals who are typically employed in these jobs that are either at high health risk or high labor market risk. And finally, they try to make policy suggestions in terms of how can the state protect these vulnerable workers, which I think is quite a brave thing to make policy suggestions based on a descriptive paper, but I think it's important to do this. So I think it's a good thing. So just for me, it was indeed a little bit hard to understand how they do the classification, but I thought that this graph could help in terms of the health risk. So basically, they have a 3-step process to get 4 categories. First, they ask whether the whether the job can be performed remotely. If the job can be performed remotely, then they say that this is a home working job. If not, then they ask if it requires at most low physical proximity at work. If the answer to this question is no, then that becomes an unsafe job automatically. And then the remaining kind of middle categories, they further refine with whether it requires contact with customers. If it doesn't, then it's a low physical proximity job. And if it does require contact, then it's classified as a job with some interactions. So here, I think that also in the paper later on, they kind of merge these two categories together, and there is not such a big difference. So I'm not sure that this is a detail that is very important, and maybe it, you know, the kind of the description of the whole paper could be simpler if they just put these two categories together. But then they end up with these four categories where kind of the colors show you how risky it is, in line with the Italian color codes for the regions. And okay, so and then the second, so this I think is the main contribution, is that they combine this health risk with the labor market risk measurement. And here they want to classify workers as essential or non-essential. And they take this from Fasani and Mazza, and they say that who classify essential workers are as those who keep people healthy, safe, and fed. So this is a very clear statement in theory, but I think it's very hard to implement. And how it is implemented here, which is how they do it in the original paper, is that they identify occupations which are essential occupations. And here is a list from this is from the appendix of the paper, a part of some of the essential workers. So these are medical doctors, where I think we can all agree these are going to be essential workers. But then if you look down here, I mean, process control technicians, I have no idea what processes these people control, whether those are essential or not. Or database and network professionals. For sure, in some instances, these are essential workers, but in others, it might not be. So I think for me, whether something is essential or not is more related to the output that it produces. So it's really, I would classify workers as essential and not based on what goods and services do they produce. Okay, so whether the goods and services that they produce, are these essential or not? And this is better captured by the industry of the individual. So here, this is the NACE industry categories. I just took the list and like highlighted some. So these are not those that I consider essential, but you see that, for example, probably agriculture, we would classify all agricultural workers as essential because they are producing food. From manufacturing, probably some are essential and some are not. So food products, beverages are essential, maybe even tobacco. Leather and related product workers are probably not essential, okay? And then if you look at retail trade, you will have some that are essential. So people who, you know, work in food, beverages, and tobacco and specialized store, these are going to be essential workers. But those who maybe in other household equipment, you know, retail of other household equipment, that might not be essential. Similarly, within education, we can also differentiate. Here in education, in the NACE, they have like primary school teachers, middle school teachers, you know, university, and then they have like specialized teachers and other teachers, which are sports, recreation, cultural driving. I mean, workers in other education categories. So these would be sports, recreation, cultural driving, which is probably not essential. Whereas we might classify primary education as an essential industry. So I think that it would be better to focus on industry rather than occupation in terms of classifying essential versus non-essential workers. Of course, this is also not straightforward because we can classify the final consumption as essential or non-essential. But to keep these essential businesses running or industries running, you need inputs from other industries which are not directly essential. So you would really need the input-output table of the given country to understand what industries you need to keep open to keep the essential industries running. And so maybe as a first approximation, one could just look at directly just the final consumption, essential, non-essential industries. But really a better measure would be to look at the input-output table and see the distance from essential industry of each industry. And so I think that to get these two aspects of risk, health and labor market risk, it would be better to combine occupation and industry the worker rather than to rely on occupation alone. So let me see how I'm doing with time. Okay, so with the validation of the categorization, so of course, let me mention just that the industry and the occupation, in a lot of cases, they overlap. So if we think about, like hospital workers, these are usually medical doctors, they're going to be nurses and so on, but there will also be other occupations in there. So I think that it's at least reassuring that their classification is validated, but I think it could be improved upon. So they validate their findings in three ways. So the first one is these work injury claims across health risk categories, and they show that the vast majority of work injuries are in unsafe occupations. And here I think one thing that would be good, so this is really just, if you sum these sum to one. So it just tells you that, most work injuries were in unsafe jobs, but it would be really good to see, what is this in terms of what fraction of people working in these unsafe occupations got injured. So it would be really good to split the employed by category into sick or injured, at work, and not at work due to restrictions, because that would give us a little bit more information on, why is it that all the work injuries in unsafe jobs, is it because these are the only people who are working, or is the majority of employment in these unsafe jobs? Okay, I think I'm going to skip the comment related to this that I had. I think the other validations are good. I wanted to just add here for the third one, which was this regression analysis, that maybe you could look at not just separately whether somebody is in a health risk, which health risk group they're in, and whether they're essential, but the interaction of the two as well. And let me skip this here. They characterize who is in unsafe jobs. And so in terms of the policy suggestions, as far as I understood, you have 4 policy suggestions. One is to extend unemployment insurance. The second one is to encourage worker mobility towards sectors that are away from the non-essential unsafe sectors. But here I'm not sure, like, why would it be the case that the demand for these unsafe, non-essential activities remains low even after the pandemic? So I would expect that there is some return to, in demand for these activities. One that you didn't mention is to this thing that you think that they should target policies by sector, occupation, and firm size. And here I think what would help a lot in targeting this is actually if you would classify the labor market risk based on the industry, because then you could really look at the country level, what is the exposure of this country to the health risk by looking at the occupational composition within each industry, and then looking at what are the essential industries, what are the industries that they can shut down, in order to reduce the health risk. So I think I'm going to stop here, and thank you again. Thanks.
Thank you very much, Sofia. We have some questions before that we can gather before you answer. So Harald, you have a question? Do you want to, which is in the, do you want to ask
maybe
it?
You maybe just to understand how the classification worked. I mean, school teachers, can you take us through school teachers, since everybody's familiar with school teachers? Obviously much of that is done at home. Were there as categorized as workers that can work at home, just as an example?
Okay, thanks. Guillaume also has a question. Guillaume Chapelle.
Yeah, thank you. I was just wondering from a technical viewpoint, so your approach is to first kind of guess from yourself what would be the essential, non-essential works that can be at home and not be at home. Whereas now you have the data, you know what happened. So why wouldn't you also try another technique, reversing? So matching your data NOS with what happened during the pandemic, who was in telework and not, and use a kind of regression tree or machine learning algorithms to do your classification, because I guess machines are better to classify and predict than people with random guess. Or even educated guess, sorry.
Thank you for educated. Gabriel, you also have a question?
Yes, so my question was related to the fact that it seems to me that among a lot of essential workers are actually civil servants. And so I was wondering whether you could actually show, what is the share of civil servants in different categories? Because when it would be interesting to know that, and also it might have consequences in terms of effects on employment, wages, etc. And maybe actually there are variation across countries.
Okay, so I think we had all questions in the chat. So Gaetano, if you want to start answering.
So first I want to thank Joan and Sofia for the nice discussion, and especially for a lot of the nice suggestions they have for us. So I think I cannot answer to all of them because some of them are really suggestions that we hope to do in the next iteration of the paper. So one thing though that Joan mentioned was the timing of different ways of waves to validate some of the results. I didn't have time to present, but we have some evidence from the third quarter, so the summer of 2020, where in some countries there was still a pandemic, like in the US, and some there was not at all, like Italy. And so some of the results are nice to see them during the third quarter, because in some cases, in the US, we see that everything is still going on as in the second quarter. In Italy, we see that some of the sickness leaves and so on are still on only for the highest risk group. And so we have already done some of it, but for sure we can explore, and especially we can explore, as I think Sofia was suggesting, by or I don't remember now who, but by validating with other countries' data. And now the point about essentiality with that Sofia raised is well taken. So we wanted to contribute by providing an health-related classification that was not there out in the literature already when we started the project. And the idea of Fasani and Matze was that of taking suggestions by the European Commission for services and goods that are essential, and so they somehow map this into occupations. Of course, it's not precise because, as you pointed out, there are occupations that makes maybe not so much sense. But I've tried working also with other Italian data on sectors and so on. It's really hard to define what is essential or not, because exactly of the issue you raised about input-output tables. And but that's a great point, and I'm sure we can think more and do some more work on it. Let me look at the various comments. Let me answer the other questions. The questions by Harald on school teachers. If I remember well, and my co-authors can correct me if I'm wrong, school teachers are classified as people that have to work on site. And I mean, it's true that during the pandemic, a lot of school teachers, many school teachers worked from remote, but the classification is ex ante. Many other countries, school teachers didn't work from remote, like France until 2 weeks ago, as we saw, and so it's still unclear whether we should classify school teachers or whether school teachers as productive and as effective in both environments. But that's what the classification tells us. Guillaume's questions about reversing the classification, it's great. In a way, our regression kind of confirms, at least to extent, our arbitrary classification. Well, the policy goal was really to provide a timely guess and for policymakers, especially back in the days when we started the project, to try to target some of the policy interventions. And so it can be definitely make more precise going forward. It still seems to be still meaningful and informative, but it's a good point. Thank you. And Gabrielle's questions about civil servants, definitely. We didn't look at public employment in particular, so I don't have an answer for you now. I don't know exactly how many are there in each category and in each country, but it definitely has implications for employment and wages for sure. And it's also a great point. I think I answered most of the questions, or at least, and still thanking again for the suggestions, for which I don't have answers now, but I'll definitely take into consideration.
Okay, so I just want another small question about, I mean, the way you want to implement your policy recommendation, because I mean, your categories explain a very small share of the variance. If we look at the, I mean, for instance, at the short-time work take-up, or it's like 3% of the variance. So what will be the policy recommendation on this ground? Will you say, well, there are some jobs, some profession that will, I mean, will be automatically accepted, but so, or you will refuse? I mean, what will be the recommendation exactly? When you have such a fuzzy prediction.
Sure. So we take that exercise as a validation of the classification. We don't want to make a policy prescription automatically dependent on our classification of short-time work. Of works that need to be made on short-time schemes, to put in short-time schemes. So given that our classification is somewhat meaningful, of course, it doesn't explain much of the variance. There is a lot going on. There is also a lot of within countries differences in which industries and firms can access to these. So, of course, we cannot explain all the variance. But once we have validated the classification, we identified those groups of workers and firms and so on that are more likely to be in a certain group of at-risk job, and so we suggest to make sure that those schemes and furlough schemes target or get to those workers and firms.
Okay.
I don't know if Tito had something to add.
Simply now, a couple of things. Now, first of all, on answering Harald's question, there is a difference between teachers, clearly. The primary school teachers are classified as unsafe, and the secondary school teachers and the university professors are instead those who could work remotely in our classification. And, you know, this is something that should have been taken into account. There are countries where university professor has been targeted for vaccination as a priority, and I think that was an outrageous decision. So had they been thinking in these terms, would have been way better. In terms of the policy,
can I just briefly follow up on that? I mean, the intention of the question was also, since we're all familiar with school teachers and professors in particular, you know, I wonder, you know, whether that issue also arises in many other professions where these boundaries, categorizations should be seen as maybe somewhat more fluid, or is this specific? Do you think this is specific to school teachers and university professors?
That is somewhat specific, but clearly, you know, we go at 3-digit classification of occupation, so there are quite important differences when you work at this level of disaggregation. So that is possible also for other professions as well. So the classification of essential occupation is something which is based also in interaction with policymakers. So it depends also on the decision that were made in several countries about the nature of the lockdown. So there were some clearly derogation to the lockdown, but were based mainly on the occupation and not only on the services being offered. So I think that was somewhat useful. But in general, the idea of this exercise is to see, I mean, I agree that if we wait a couple of years more and we work on administrative data that at some stage will be available, we'll be able to do a wonderful classification and perhaps do a machine learning process and get a wonderful classification of and understand all of these things, epidemiological risk and so on. But here, the idea is to do something that can be done at the time where policy decision decisions have to be made. I mean, and you have to work on ex-ante information to a large extent. I mean, countries have to some extent to make a very important decision at some stage about targeting of policies and also lockdown measure and social distancing and various type of things and social insurance. And they had to act on the information that was available at the time. So I think our validation exercise, which is based on ex-ante information and then validation for now, I mean, for the information which is available now is somewhat informative, and it tells us whether, when you make a recommendation at the time where information is available and with the timing of a decision is somewhat useful or it is useless. I agree with Pierre that we don't explain a large extent of the variation in short-time work, but short-time work, as we know, is very much on the intensive margin. So we should not simply look at the extensive margin of short-time work. And if you look at the intensive margin, clearly this type of schemes have been more used in the sectors that were unsafe and non-essential also. So in that respect, another very important point that comes out of the analysis is this fact that this has been a recession for the self-employed. This is something where we are really not very much being ready for, and it's something that requires a lot of attention on our side. I think we have to work very much on how to improve that. And I agree that perhaps we should be more sharp in the recommendation on how to provide the protection to self-employed people, how to address a number of issues relating to also to social distancing and to reduction of the contagion risk among the self-employed people. This is a very important area that has been not so much investigated, and perhaps we suggest it is very relevant.
Okay, thank you very much. Thank you. Thank you, Gaetano. Thank you, Zofia. Thank you, Juan. Thank you, Tito. And now it's time to go to the evaluation of the Swedish solution. Dirk, the floor is yours.
All right. I hope I can be heard. I will.
We hear you very well.
Excellent. Let me share my screen. All right. Well, thanks a lot. Thanks a lot for having us on the program. I learned a lot in the last 2 days from all the papers. Hopefully this will also be true for the last one. So this is macroeconomic dynamics and reallocation in an epidemic, evaluating the Swedish solution. And it's joint work with Harald Uhlig and Tao Juan-Shi, both of which are in the audience and are well equipped to answer all your hard questions. So what is all this about? As we are painfully aware of, the COVID-19 crisis has had massive costs, both in terms of health as well as in terms of economics. Just to fix ideas, let me show you one picture from Sweden. So this is from February 2020 to February 2021, the number of weekly deaths in Sweden per 100,000 people. What you see very clearly is 2 waves of deaths. One wave in early spring of 2020, and then a roughly equal sized wave in the winter of 2021. And associated with this wave, there's severe economic recessions in countries around the world. And in response to this health crisis, governments around the world have taken a variety of policy approaches. Some countries some governments have locked down the economy and imposed fairly substantial social distancing rule, such as the US, Germany, France, and Spain. If you happen to be an island, you can just log off the island, as New Zealand did. Other countries, notably Sweden and Brazil, and today we will focus on Sweden, took a more laissez-faire approach, at least when it comes to the economy, by essentially relying on voluntary social distancing measure, but in particular, not locking down the economy, but rather keeping it open. And what this paper does, it asks the questions, what are the consequences of the quote unquote Swedish solution? By that mean an economic laissez-faire approach of not locking down the economy for the evolution of health, as well as the macroeconomy. And if you're taking score, hopefully consistently, health-related things are going to be in red, economic-related things are going to be in orange, and policy-related things will be in green, and everything else will be in blue. How do we approach this question? We will construct a relatively standard dynamic macroeconomic model integrated with a relatively standard epidemiological model of the SIR variant. In that, we follow very closely, perhaps one of the first and most prominent papers in this literature written by Eichenbaum, Rebello, and Trabant. In that model, households can privately respond to an epidemic by adjusting their labor supply and their overall consumption. To that model, we add a twist. We assume that consumption occurs in different sectors of the economy, and these sectors differ in their innate technology of with respect to how risky they are in terms of COVID infection risk. So think of, you can either consume food at home by cooking, or you can consume food in a restaurant. And if you consume food at home, the risk of getting infected with COVID-19 is substantially lower than if you go out to a restaurant. So relative to the paper by Eichenbaum, Rebello, and Trabant, what we add is we model these multiple sectors, and we model the endogenous decision of households, which sector of the economy to consume in, and therefore respond to the epidemic by adjusting not only the level of their consumption behavior, but also the sectors in which they consume. The model is simply enough that I can essentially present it in 2 slides, and it has 2 components. It has the economic side and then the epidemiological side. Let me start with the economics. So in the model, there's a continuum of ex ante identical households. So they all look alike at ex ante, but exposed. They can be one of 4 groups distinguished by the health status. They can be susceptible, they can be infected, they can be recovered, or they can be dead. Health status is denoted by age. So susceptible people are people that are currently healthy, never have had COVID-19, and therefore are still susceptible to getting the disease. Infected people are people that are currently infected, they have the disease, and importantly, they can currently spread the disease to the susceptible people. Then you might recover from the infection. And if you're recovered, we are assuming that not only can you not get COVID once again, but also you cannot spread it to other people. And if you are unlucky and you got infected and you had a severe disease, you will die from COVID-19. So age stands for one of these 4 health statuses. Households are potentially infinitely lived, subject to the caveat that you might die from COVID-19. They discount the future at rate beta. What do they care about? At least when they're alive, what do they care about? They care about how much they consume and how much they work. Whereas consumption is a CES aggregate of consumption in different sectors. So K denotes the sector of the economy, and eta, that's a crucial parameter, that governs how easy it is for households to substitute consumption across 2 sectors. So if eta is very small, then you want to consume a rather fixed consumption basket across sectors. As eta goes to infinity, these goods become perfect substitutes, and therefore it's very easy to substitute food at home with food in restaurants in terms of your utility, in terms of their utility function. There's a continuum of sectors. As I said, sectors are indexed by K. If you're alive, your utility function or in terms of overall consumption is logarithmic in consumption and quadratic disutility in leisure. So this is in labor. So these are standard balanced growth preferences. If on the other hand, you're dead, your utility from being dead is equal to 0 and you make no further consumption and labor supply decision. As you may know in these type of models, what is your utility from being dead? That's not an innocuous normalization, because households make choices that partially determine whether they become sick and their probability of dying. And therefore, we will have to make sure in terms of parameterization that utility from being alive is actually higher than the utility from being dead, because otherwise in this model, people would try to get infected by COVID and try to commit suicide as quickly as possible. So we have to make sure that that's not happening. On the technology side, everything is quite standard. 1 unit of labor produces A units of output. And this linear production function together with perfect competition on all markets implies that in equilibrium, the real wage is equal to A, and the prices for all these consumption goods in all the sectors are equal to 1. So this is the economic side. Households make 3 decisions: how much to work, how much to consume, and given how much to consume, in what sectors of the economy K they do their consumption. Now let me turn to the epidemiological side of the model. As I said, that side of the model is described by a standard SIR model. SIR stands for susceptible, infected, recovered, and then some people call it SIRD for dead. So big S stands for the share of the population that's currently susceptible in period T, IT for the share of people that are infected in period T, recovered in period T, and dead in period T. As I said, the main catch of the model is that we have different sectors of the economy indexed by K, and these sectors differ technologically in the degree to which consumption leads to infections, as parameterized by this function phi of K. So highly infectious sectors are high K sectors. Low infectious sectors are low K sectors. The average infectability of a sector is normalized to 1. And in fact, in applications, we will think about 2 sectors. So the low infectious sector will therefore have a phi 1 less than 1. And the high infectious sector will have a phi 1 bigger than 1. And households can choose which of the 2 sectors to consume it. Now, I remind you, households have a love for variety. They would love to spread consumption across these 2 sectors, as long as eta is not infinity, as long as these goods are not perfect substitutes. So why wouldn't they do so? I would say the key equation of this paper is the probability for a susceptible people to get infected. And this is what this is given by. So think about the susceptible agent denoted by S, and think about that household's consumption choice. This household takes as given the consumption profile of the infected people. And infected people, they're already infected. They can infect other people, but they can do no further harm to their health, so to speak. They have a love for variety, so they will spread their consumption across all sectors equally. So the susceptible people take consumption of infected people as given, and they will choose which sectors to consume in. Why would they not spread consumption equally across sectors? Well, because they understand that their consumption behavior affects their probability of getting infected. So tau T, that's the probability that a susceptible household gets infected. What is that determined by? It's determined by an infection parameter pi, which is allowed to differ by time to capture potential seasonality of infection risk. It's determined by how many infected people float around in the marketplace. It's determined by how much these infected people consume. And again, a susceptible person takes that as given and then chooses how much to consume in any given sector, understanding that high sector K, because of the technological differences, have a higher risk of infecting you while consuming. Low sector Ks are sectors in which the risk of infection is lower. So the key economic decision that households make in this model is how much to consume and in what sectors to consume. And susceptible people that are not yet sick and that are afraid of getting sick consciously make a decision of how much to consume and in what sectors to consume to balance their love of variety and consumption with the fear of getting infected, getting sick, and potentially dying. So this is really the main equation of this model, and that drives all the economics in the model. The rest of the pandemic model is then completely standard according to a standard SIR model. ST is the number of susceptible people today. This number of susceptible people tomorrow is just a fraction of the population that was susceptible today, times 1 minus tau. Remember, tau was the probability of a susceptible person getting infected. The number of infected people tomorrow is then the number of infected people today, plus the inflow of newly infected people minus the outflow of people out of the infected pool. And you can float out of the infected pool because of two reasons, either because you recover, which happens with probability pi r, or because you die, which happens with probability pi d. So at the end of the day, what are the parameters that determine the health outcomes in this economy? The infection probability across the two sectors, the probability or the parameter governing infection risk, which might be seasonal and might differ between the winter and the summer in Sweden, as well as the probability of recovering and the probability of dying from an infection. How do we get the pandemic started? There's going to be a small exhaustion, a shock in the number of infected people. So sometimes in February, a small number of infected people enter the Swedish economy for exogenous reasons, and that gets the pandemic started. How it then will unfold is determined by the pandemic block and by the economic block, and all the interaction between economics and epidemiology is given in this infection probability equation that determines infection risk as a function of economic choices of the susceptible people. What will determine the dynamics of the model when it comes to health outcomes and economic outcomes? Essentially two forces. The SIR dynamics, and in particular, when working with this model, we learned that it's really important to allow for seasonality in the infection risk. So that's the first component, the epidemiological side, including seasonal infection risk, and then the economic side as determined by consumption behavior. So let me first talk about why we need seasonality in infection risk to do a reasonably good job quantifying the death dynamics in Sweden, because I showed you the data, and the data say there were two major waves of deaths in Sweden, and these death waves were of roughly equal magnitude. So in the basic SIR model, it's incredibly hard. In fact, we found it to be impossible to generate two waves of infections, especially the second wave of infection, without seasonality of infection risk as given by this pi, because at the end of the day, deaths are roughly proportional to infections. If you want to generate two waves of infections, especially the second wave of infection, you need an increase in the probability of getting infected around the winter of 2020-21. And the way we will achieve that is by having an increase in this infection probability from the summer to the winter. But that's not enough, in fact, because if it were the case that Sweden around September or October, the number of susceptible people is already so low that Sweden would have reached herd immunity. And in their version of our papers, that actually did occur prior to the revision. Then even if there's an increase in infection probability, you will not generate a second wave, because if you have already 80% of the population that's been infected and recovered, and only 20 or 10% of the population that's still susceptible, it's very hard to generate a second wave. So you need, at the onset of the second wave, the number of susceptible people still be plausibly high. But that actually imposes restriction on what your view is about the first wave, because the first wave says there was a big increase in deaths, and then there was a rapid decline of deaths at the end of the first wave. And the way the SIR model rationalizes that, you can either have an adjustment in this infection parameter, or you can have a massive decline in the number of susceptible people, because that determines the infected people and therefore deaths. But if the number of susceptible people declines very, very rapidly at the end of the first wave, then you end up in the summer with essentially herd immunity, and then you have no chance of generating a second wave. So the way that we rationalize both waves, both the first wave going up quickly, going down quickly, and being able to generate a second wave, is the seasonality in this infection parameter pi s, which we assume to be high in the winter, then fall in the summer between April and October, and then go up again in the dark winter of 2021. How about economics? Given the time, let me be brief here. As I told you, there's roughly speaking 4 groups of the population. Let's forget about dead people. They don't make any economic choices anymore. The infected and the recovered people, they're easy. They are either recovered from the disease or they're currently infected. So for them, the buck has passed. They cannot any further do any damage to their health. So what's the optimal consumption and labor behavior? They spread consumption equally across the 2 sectors because they're either not at risk anymore or they're already infected. And therefore their consumption using the budget constraint is given by this term. All the economics comes from the consumption behavior of the still susceptible people. So again, these are the people have not had the disease, are afraid of the disease, make consumption choices to balance their love for variety for consumption with their fear of getting infected. Take first order conditions. The first order condition with respect to consumption when susceptible in sector K basically equates the marginal utility of consumption in period T of the susceptible in sector K to the marginal cost. What is the marginal cost? Well, it costs you resources. This is Lagrange multiplier on the budget constraint. This is a perfectly standard term that you always have. But then in addition, the susceptible people understand that if I increase my consumption in sector K, I will endogenously affect my probability of getting sick. By how much? Well, that's given by the Lagrange multiplier on this infection probability. And in sector where phi of K is high, highly infectious sectors, the probability of getting infected is high. What do I do optimally? I reduce my consumption exactly in those type of sectors. So again, the economic choices that people make to try to not get infected is you can reduce your overall consumption and or you can reduce consumption in especially those sectors that have high infection risk and reallocating from restaurants to work at home. How much you do? This, of course, depends on how substitutable consumption is across these 2 sectors as governed by the intertemporal, by the elasticity of substitution across these 2 sectors. We have a few theoretical results in the paper characterizing different cases. Then we bring the model to the Swedish data. Broadly speaking, the economic parameters we calibrate in accordance to Eichenbaum, Rubello, and Trabant. In particular, the calibration ensures by productivity and therefore aggregate consumption in such a way that households have reason to live because they value life. Our model has an implied value of a statistical life of about $4 million US, which is sort of in the ballpark of the estimates that people have looked at. And then in terms of the epidemiological parameters, we essentially, after setting a couple of parameters to make sure that the case fatality rates and the days to recover from COVID-19 are plausible, we choose the relative infectiousness of sector 1 and the probability of getting infected or the infection parameters in the winter and in the summer to minimize the distance between our model and the Swedish death data. And the model wants a relative infectiousness of sector 1 of 0.6, which means that sector 2 has a parameter of 1.4. So these are the differences in the innate infectiousness between consuming food in a restaurant versus consuming food at home. The other key thing I want to highlight in the summer, the probability of getting infected given consumption behavior drops by 70%. That is just a seasonality of in the summer, it's less likely to get infected, holding behavior constant. So let me show you some results in the remaining, I guess, let me take two minutes. I've shown you the, yes.
No, just from now you run out of time, just to tell you.
All right, so I'll show you 2 pictures in terms of the results. I've shown you the Swedish death data. The blue line, that's our model. I would argue it fits the data quite well. The dashed line, that's a standard SIR model without any economic interaction between economics and the epidemiology. And the reason for why our model has substantially lower death counts in both weights is, of course, the economic adjustment. People consume less and they reallocate their consumption across sectors. Of course, that reallocation is not costless. It will generate an economic recession. In fact, the economic effect is, the economic adjustment is both. You reduce overall consumption. That explains part of the gap here and here. And you reallocate consumption across sectors. So a model with only one sector will have more infection rates, but only half as much relative to the SIR model. So the gap between here and here, relative to here and here, that's sectoral reallocation. Is there any evidence that there was sectoral reallocation in the Swedish data? So this is actual Swedish consumption data. There was a consumption recession of about 12% in the early spring of 2020. And there was significant signs for economic reallocation. Here I've shown you groceries that went up and restaurants that collapsed very badly. Our model exactly predicts this. In fact, it predicts an aggregate consumption recession of about 10%, a little bit less, but roughly what the data says, and massive reallocation towards less infectious and more away from more infectious sectors, even more strongly so in the second wave. Let me conclude by just say one thing about policy relevance. You might say, this is fantastic. Private incentives works. You cut consumption, you reallocate consumption to safe sectors. Why do we need government policy? Just a cautionary tale. This economy is inefficient because there's still an externality. Private households do not take into account that by getting infected, they increase the probability of other people getting infected by their consumption behavior. We in the model solve the social planner problem, and the social planner, if you give the social planner exactly the same amount of information and exactly the same tool as private households, will actually take quite drastic steps by telling the infected people, you don't get to consume, and particularly you do not get to consume in the highly infectious sectors. And if the social planner can enforce that, the social planner is able to stop the pandemic in its locksteps relative to the competitive equilibrium, where you will, despite all the private adjustments, you still get two massive waves of deaths, as we have seen in the Swedish data. And that's all I have to say. My apologies for getting a bit over. I stop here, but I'm happy to answer any question after the discussion.
So thank you, Dirk, for this high-level performance. It was a challenge to present this big model in such a short time. So Federica, the floor is yours. So Federica Rommel is going to discuss. So.
Okay, can you see the slide?
Yes. And we hear you.
So first of all, thank you very much for giving the opportunity to read this paper. I think I really like the paper, and I really like the idea that you can readjust. I'm going just to make a very small summary because I was sure that, Dirk would make a wonderful job. So it's a closed economy model with two sectors, plus the SIR, I don't know how to pronounce this. And the idea here is that households endogenously, right, decide not to consume the most effective sector, the susceptible one, right? So ideally, you don't want to get infected, so you don't go to the restaurant and you prefer to have some take-home or take-away meal. And this means that we don't need, we still need the policy because the author in the paper, they show that the first best is not achieved there. However, you can have a mitigation, right? You don't need to have this crazy lockdown, but you can have some mitigation about the fact that household will relocate to different sectors. And the model is in order to match the Swedish data and the Swedish, what happened in Sweden, both in the first and in the second wave. I will start with a disclaimer. I'm not an expert in this kind of model, or also in COVID-related model, right? So it's like there was this moment in which a lot of economists start to work on this model. I found myself I was overloaded with the COVID information, so I made my research a COVID-free space, right? However, I've been living in Sweden for 5 years. Moreover, 1 year ago, an Italian newspaper decided, here you can see the proof, that I was an expert on Swedish things, right? Genetic Swedish things. So what I'm going to use, I will use my comparative advantage, and I will focus my discussion on Sweden. And I'm sure that Moritz will make all the comments about what parameter, which kind of models. Yeah, I'm going just saying, This model is made in order to speak about Sweden and what you want to match the Swedish experience. Let me tell you something about the Swedish experience that is related to the model. Okay, first of all, is really this model about Sweden? So are we still speaking about the Swedish experience? I'm going to make two main points here. First of all, is like this data about restaurant consumption. That, I mean, is one of the main point in this paper, is that they want to show that there was this reallocation. And then second is a second point. I think also the author, in some sense, replied to this point in one of the referee reports. So I mean, in which they addressed the referee report, but still there is a point about COVID that. So lunch versus dinner. Yeah, there is something that you should know about Sweden. That is the following. In Sweden, consumption at lunch at the restaurant is very common, right? Now I moved to the UK, usually I have a sandwich, but in Sweden, almost everybody goes for lunch at the restaurant. And the main idea is that there was this historical reason that you have these meal vouchers. I don't know if this is the same the name is the same in the US, but your employer will give you like £10 or $10 and you can spend at the restaurant. So what happened in Sweden is that lunches at the restaurant, they have different prices with respect to dinner. Here you can see some empirical evidence from my favorite restaurant, right, in Sweden. And again, I don't know how to make this, okay. And here what happened is that, and also there are some places in Sweden that just open for lunch and not for dinner, right? So, and it's very peculiar and it's very specific to the Swedish experience. Now, if you don't trust my menu from the Swedish restaurant, so here you can see that you can get exactly the same things, and for lunch it costs £10, while for dinner it costs 20. So if you don't trust this evidence, what you can see here is like there is this survey, I think is present in Statista, where they ask two people if they use a restaurant for dinner or for lunches. And what you can see is that the majority of people go at lunch for restaurant at least, I mean, 1 or 2 times per week. So I think like if you sum is 35% of the respondent, they spend at least like 1 or 2 times at lunch at the restaurant, while that is much less with respect to dinner. And this is like these surveys from 2017, right? And the second thing that you can also take a look is how much you use takeaway. This is before the pandemic, for dinner or for lunch. Here you can see that usually Swedish people goes to the restaurant for lunch. I mean, there is some people that goes for dinner, but the majority goes for lunch. And they take away during the dinner, right? So there is this very different specific peculiarity of the Swedish system. Now, is this important for the narrative of the paper? In some sense, yes, because you also, so the paper want to match this relegation, but it's also true that during the pandemic, many offices decide to close, right? In order to, actually, if you look at the university, right, where I was working, it was closed. Central Bank closed, Spotify, they decided to close. So the recommendation from Technel was like, try to work from home, and most of the people were working from home. And this means that there was a lot of also reallocation of consumption that was due to a policy, right? It was not exactly one policy, but it was a sort of recommendation. So the point is that in the paper, right, in the model, all this reallocation is due to some endogenous response of the household, but I'm wondering how much of this reallocation is due to the fact that people consume less to the restaurant because they're scared to get infection, and how much is due to the fact that many offices close and many people work from home. And then, I mean, I didn't go to the restaurant where I used to go for lunch every day at the university because I was working from home. So in some sense, I think that I believe that there is some effect of the individual decision, but I think like that, at least in the model, is a little bit overstated for the moment. Another thing that I'm not sure 100%, and also I'm not sure because I think like if you look at your impulse response function, they're much more similar to the data than to, okay, well, this is the point I want to make. If I look at your data, so this is the blue line, here you take everything and you subtract with respect to December 2019, right? And yeah, you see, okay, if you look at what happened for the high decline, high infection sector, you have this huge decline, and it's true. But I was like taking the data from the Sweet Bank, you can see on the right, and you can see the consumption of restaurant. And in some sense, you have these two waves, right? You can see that there was a big drop in the first wave, then it goes back during July to something similar. Then there is a second drop in the second wave that is much more similar to what you get from your impulse response function. So I was wondering why you decide to make everything like to take the standard deviation with respect to December 2019. Also, because if you look at the Swedish data, and yeah, just plotting other data about restaurant booking in Sweden. So this is like the amount of, so in order to go to a restaurant, especially for dinner, you need to book in advance. And here you can see the difference in booking with respect to 2019, 2020, and an average that was an average pre-COVID, right? And yet there is a lot of seasonality. So when you take the data of December 2019 and you subtract, I think you're subtracting a moment in which consumption is pretty high. And it's due to two facts in Sweden. The first one is that people go, so there is the Nobel Week, that is something very important where everybody like celebrate. And the second is that there is a long tradition of people to do this Yule board that are like Christmas party, and all the rest, all the office do something like that. So I don't understand. So I think that here maybe you're also capturing some seasonality. Now to conclude, the last point is also about the COVID death in Sweden. So 50% of people that died in Sweden, they were living in care homes. And from the 1st April of the first wave, these visits in the care home were completely prohibited. So even if a person would die, I think you cannot visit him. So I think like this means that many infections took place, right? In place where you were not visiting your relative. So in some sense, I think these people that were living in care homes, most likely they were not consuming restaurants, right? You can say workers that were going to these care homes were consuming restaurant, and maybe they dropped their consumption because they don't want to get infected, the people that were working in, that were in the care homes. However, so I don't think that all this mechanism about being scared to infect someone else was actually there. So I know that in the discussion that you have with the referee, with one of the referees, you say, okay, but you should care about your family, right? So I'm young, maybe I go to the restaurant. I don't go to the restaurant in order not to get my mom infected. However, in this case, this mechanism is a little bit different. So maybe, I mean, my point is that maybe you shouldn't match all these death rate exactly, specifically, because there is not the need, because some of the death is due to something different. So to conclude, I think it's a very interesting paper. I really like the paper. I think like the idea that household will reduce the spread is a nice idea. And also this idea that you have this laissez-faire that it seems to work in some dimension. However, I'm not sure 100% that you can disentangle the consequence of the policies from the consequence of the individual behavior. I hope that I was on time.
Perfectly, thanks. Thank you very much. So, Moritz?
To share, which I don't know.
It's your, so Moritz is going to discuss, is the second discussant. The floor is yours.
Okay, I'm making progress, just, I don't, here are my slides. Okay, sorry. Okay. No. Okay. Here we go. Okay, first of all, thank you very much for giving me the opportunity to discuss this this paper, and I share my prior, or I shared my prior with Frederica on like Dirk's presentation. That it's going to be extremely clear and concise, and that there's in that respect very little for me to discuss. Unlike Frederica, I'm going to change a little bit flight height and like do not a low altitude flight, but a very high altitude flight, and look at what the authors have done from like 30,000 feet. So I think I want to just maybe offer a few thoughts that I had when looking at the paper that I think go even beyond the paper and are like more food for thought for research in macroeconomics when we think about policy and also trying to understand macroeconomic dynamics in general, because I think the paper here touches upon at least two of these topics very, very clearly. So the first thing is, and that's like the starting point of the paper, is that the pandemic actually turned social interaction into risky behavior. And I think that's the first interesting observation to be made. Like in many of our models, interaction happens in markets, and it happens in anonymous markets where I just go and buy goods and that makes me happy. But social contacts are also an important part of human life, and consumption oftentimes happen in public. So I might not only go to the restaurant to have a pizza, but also to be like together with other people. So the being together with people and enjoying certain events together with other people might be important. And that's maybe something that we as a social science have over the past years a little bit underappreciated, but I think the current situation makes very clear that this might be an important thing to think about, and that might even go beyond consumption in the labor market, where we work in groups and teams. I think the economics profession is also a particular example for that. That might be something that might be worth thinking more about in the future, and also with respect to policy. The second thing is that the paper emphasizes that there is a risk-utility trade-off between specific consumption goods and the risk of infections. So, and I think also this is an important point, and it's like also pointing to a direction that we see, I think, also in different areas of macroeconomic research, that we used to write models about consumption where people buy consumption baskets, which is typically GDP, and like everyone consumes one basket of GDP and then a certain fraction of this. The same maybe when it comes to consumption saving decisions, where we think about people accumulating wealth. This is just the capital stock or the typical portfolio of the macroeconomy. Especially when it comes to research on wealth, we have realized over the last years how important it is to think about different investment goods, about different assets, and the portfolio choice of households. And I think in a certain sense, we can think about this paper as also doing some portfolio choice, but for consumption, where I choose my consumption basket, and this is really relevant to understand macroeconomic dynamics. Particularly, I think for the current and specific situation about the pandemic, I think it emphasizes a point that cannot be emphasized enough, and at least from my experience of the discussion in Germany, that I think has been underappreciated in many of the public debates. It's namely the role of behavioral responses to certain policy measures. So if people expect that a certain policy is going to be in place, or that it's dangerous in general to go out because you can get infected, it's not that as maybe a physicist would think, that I wait until I crash into the car before I press the brake. But if I see on the motorway that there is several cars in front of me, I just slow down the speed. And that's something I think where we as economists can make particular contributions, because that's what we typically do and analyze in our models. Then I thought I don't get the opportunity too often to cite De Breu, but I think it's very well fitting here. So if we think about consumption goods, then I think this, and in the context of the question of the current paper, I think this quote from one of the first pages in the theory of values is really what this paper is about. A good is at a certain location, and the same good at another location, so pizza at the restaurant and pizza at home, are different economic objects. And the specification of location at which it will be available is essential. So that's really what this paper is about. And what is essential here is that goods have a second dimension, namely their risk of how infectious it is to consume these goods. So now we have a good that is two-dimensional. It gives me utility from consuming it, but it also exposes me to a risk of getting infected. And now the households have to solve this portfolio, let's call it portfolio choice problem of like a risk-return trade-off. I love going to the restaurant, but I also understand if I go there, that I have a higher risk of infection. And now if the return stays the same from going to the restaurant, but the risk goes up, I reshuffle my my portfolio towards less risky consumption. I think that was that is a very nice idea. Then the second thing that I was actually surprised about, that I was completely not aware of, is like how challenging it actually is for these SIR models to generate a two-wave pandemic. And I think Dirk also explained this very nice in his presentation, and it's also nicely explained in the paper. But it was really very surprising for me to see this. One thing that just came to mind, and I think that would be at least nice to discuss in the paper, and that I think would be very nicely in the spirit of the paper, is also to think about seasonality of preference. I just love ice cream more in the summer, and different types of consumption might be also, well, like in the model, different types of consumption are just related to different infection risks. So it might be that in the summer I just have preference for outdoor activities that have a lower infection risk, and in the winter I do indoor activity that have a high infection risk. So the question would be, could we, by preference, so endogenously generate this the seasonality in the pandemic just by people shifting their consumption basket? I admit I'm a little bit skeptical that you can get like these large waves, but I'm also not sure like how much of a movement you would need in preferences to generate such a wave. And I think the nice thing there is potentially we might have data, and Dirk showed some of these data on the consumption that people, or the activities maybe that people do. Let me also say some words on the optimal policy exercise that they do, and maybe that also gives Dirk the opportunity to say a few words more on what exactly they did. So they solved the social planner problem, where the social planner has perfect information on the health status of the individual, where I think that also came already up in the chat. As a government, it would make things much easier if I know the exact health status of all individuals, and definitely would make the management of the pandemic much easier. So, but that's a crucial assumption for what they do. Or for what they analyze. And then what comes out in the spirit of the PRU is that there's a huge, the optimal or the social planner solution has a strong restriction on the consumption basket. So you, in the end, if you want, the consumption basket is full quarantine. You only have you only can consume food at home. So and that's maybe something to clarify, because the authors very much emphasize in their like motivation for the optimal policy exercise that they don't allow for what they call the Chinese solution, where you just lock down like neighborhoods or areas with high infection rates. But in the end, my interpretation is this is exactly what they actually get as an optimal policy, because they lock people in their apartments and say you only get food delivery, and there's nothing with any outdoor activities for you anymore. And this is exactly how the social planner can contain the pandemic. So, and I think Dirk said this in the end, like there's still externality. So these behavioral responses are important. They are quantitatively meaningful, but it's still the case that a social planner can really get into this situation and like clear up the situation and end the pandemic very, very effectively. One question would be here, and I expect that Dirk might be very happy to talk about this, is also about the distribution of welfare gains and losses from the social planner solution. So just if I still have 1 minute, let me just try to see, or what I think might be lessons for policymakers, but this is also to a certain extent just conjectures that I think could be true. What seems to be clear is that endogenous behavior or the response will mitigate the impact of any change in the macroeconomic environment. So it's not like that we have agents that just operate according to what the government is going to tell them, and they are only going to react as soon as the government is going to tell them to change their behavior, but also in response to changes in the macroeconomic environment, they are going to change their behavior. Which also means that if in a situation where the pandemic is already ongoing and now we introduce restrictions, and policymakers, I guess, are very much concerned about that people are very much affected or constrained by any restriction that they impose, it might be the case that these restrictions are not as harsh as they appear at first glance if I take as a reference point normal behavior. But if people have already adjusted to the pandemic, then the behavioral adjustment that they have to do just because of the additional restrictions might actually be much lower, and therefore also the welfare consequences of additional restrictions might be much lower.
Moritz, you should conclude,
okay.
I think.
Just final point. I think in general, if you think about the dynamics from additional restrictions, we should always keep in mind that a lot of people in the economy might be inframarginal, might not be affected because they have already adjusted their behavior. I think that's something important to keep in mind also for policymakers, not only here, but just in general. I think that's a point that cannot be emphasized too much. And my conclusions I can just skip. Thank you very much. It was a great pleasure to read the paper.
Okay, thank you to all of you. So I do have many discussion in the chat because Harold is very active. So perhaps it would be fair to give the floor to Dirk to answer.
Okay, let me quickly, first, thanks a lot for 2 great discussions. I learned a whole lot more about my own paper. Let me start with Federica. Lunch versus dinner in Sweden. I'm very glad to see how much of a scope for reallocation there actually is. I'm glad to see how much food away from home the Swedes consume. And I would say that if a lot of that is lunch and a lot of that is work related, I would submit that even if you work from home, you still might want to go out for lunch to a restaurant and consume in a restaurant, and reallocating away from that. That's exactly what we are trying to model. In the paper, actually, we show that depending on assumption, there's an isomorphism from getting consumption generating infections versus infections at work. So you can reformulate the model and make that equivalent. And the last point, Sweden was not completely laissez-faire. That's totally guilty as charged. This is clearly an idealization of what Sweden did in practice. Certainly there were social distancing measures, which I think partially capture the time varying infection parameters. On the economic side, there were some restrictions, and therefore the characterization as full laissez-faire is perhaps too extreme, but I think it's a pretty good first approximation. On the data, we do control for seasonality, and the fact that the data that you showed and that I showed don't quite line up. That's my fault. I didn't explain that well. When I showed the data at the end of the presentation, I did not only take restaurant consumption, but there we split all sectors of the economy into 50% of the sectors that went up and 50% of the sectors that went down the most. And that's why this divergence between your and my picture is coming from. So seasonality we certainly control for, because that's important. And then the picture that you showed was only for restaurants. The one that I showed at the end was for dividing Swedish consumption sectors into two broad categories: the ones that did well and the one that did not well. In terms of deaths, I do agree. I think there's scope for potentially making the death probabilities time dependent as well, and recognizing that in the first wave, a lot of the deaths were retirement home deaths, and therefore the case fatality rate was perhaps larger than in the second wave. So that's certainly well taken. On Moritz, behavioral responses, we totally agree. Preference shifts, I would submit that if you give me no discipline on preference shifters, I can certainly generate with preference shifters exactly what I can generate with respect to the seasonal infection probabilities. And then the question would be, how plausible are these preference shifters? Do we need them to be extreme? Do we need them to be plausible? Lastly, planner solution. We viewed the planner solution not so much as a realistic policy prescription, but rather as a tool for learning how important private adjustment is relative to what the planner in an ideal situation would do. So we give the planner exactly the same tools and exactly the same information as private households. The planner knows whether people are infected or not. The planner can dictate consumption of everyone. What the planner cannot do, and that's, I would say, typical in planner problem, cannot change consumption technology, and therefore cannot say, well, you infected people, you consume in a different corner of the world than you susceptible people, because that would effectively change the consumption technology. If the planner could, certainly the planner would tell the infected people, you consume in one corner and the susceptible people consume in another corner, and that would be the optimal thing to do. We don't allow the planner to do so, and therefore what the planner does do is tell the infected people, look, you are a risk to society, you are not that many of you, and in fact, if I clamp down on your consumption, there won't be many of you, and therefore that's why the planner is so draconian to the infected people. From an example point of view, that's optimal, but as Felix, as Moritz hinted, of course, from an post point of view, the infected people's welfare is very severely affected by this draconian policy. But on the other hand, that's what avoids having a lot of infected people in the first place and stopping the pandemic in its lockstep. And we wanted to just make the point that private behavior goes a long way towards mitigating the epidemic, but there would be a large gap between that and what would be socially optimal, fully recognizing that what is socially optimal is likely not implementable as actual policy.
Okay, so are there other questions? So I have just a question on this. I mean, there is strong heterogeneity according to age in the behavioral response a priori, and so I'm not sure. I mean, I'm not sure it's the same thing to work on the average of population or having two different groups. One group that does not, I mean, has no death risk, but has the same risk of spreading the disease. And so, did you think about that?
I would say yes and no, not in this paper. So I have a couple of other papers with other co-authors that exactly looks at this dichotomy. And there you get what you would expect. If you have old and young people, the old people essentially don't care too much about the economic consequences of the crisis because they tend to be retired unless they're altruistic towards their kids. And young people don't care too much by themselves about getting infected because the probability of dying from this thing is rather low. And then you get the obvious intergenerational conflict. Here, we almost take the opposite extreme and say, these guys are all happy, altruistic families, and therefore we take sort of an infinite horizon approach. So I would say, in general, if you ask me personally, I'm very favorable towards that question. But in this paper, I think we acknowledge it, but we don't do too much about it.
Let me maybe also chime in here, if I may, right? Because the issue came also up with the old people being more affected by that first wave. But then the second wave is actually raising an interesting challenge, and I would like to see future research maybe to think about that more, right? So if the first wave is entirely explained by having lots of old people dying, right? Where's the second wave then coming from? So that makes a challenge of the whole infection risk dynamics and to get the seasonality even stronger. I mean, so I think it's an interesting aspect for sure. And thinking that through and explaining both waves then is going to be a really interesting challenge going forward.
Okay. So it's time to stop, I think. So thank you very much to all of you. Very nice presentations, very, very nice discussions and nice papers. So thank you. We have to close now. So we meet in about 6 months, I think, perhaps on live, for real. Not sure, we'll see. It depends on the third wave. So thank you so much, and see you another time.
Thank you.
Thank you. Bye.
Thank you all. Thank you.
Thank you very much. Thanks for the great.
Ciao.
Thanks,
Thank
everyone.
you very much.
Thank you.
Bye-bye.
Ciao. Bye.
Bye-bye.
Thank you.
Take care.